are finally back. Thank you everybody for being here. Finally back. Thank you everybody for being here. Finally back.
Market open.
Thank you everybody.
Long 7 days.
Market open.
Once again, we
Long
are back.
7
The
days.
only reason I'm late today is because I saw a comment saying I would be upset if Amit is not late today. I was here. I was ready at 8:45. And I said, you know what? Just for that comment, we are going to bring back the OG lateness to the OG market open. We're officially back. Thank you, everybody, for being here. We have so much to talk about. As you can see, I brought a little bit of the vacation with me to work, rocking the Hawaiian shirt right here. But yeah, I'm excited to be back. I'm a little nervous to be. I haven't gotten nervous to like do a show in like, I don't know, 4 or 5 years. I've been doing this. Today I'm like stomach's little butterflies and stuff, but I'm excited to be back. I think it's natural every time you take a break from something that you've been doing for a long time and get back into it. I think it was a much deserved break, and we'll kind of talk about what happened over the break. There's obviously a lot of news to get into, and there's a lot of stuff to dissect in the context of the markets. But overall, it was a fun time. It was a fun time. I think it was much deserved. It was the first real vacation I've had in 4 or 5 years. I think the only actual vacation was India back in October of 2024. And then before that it was like 2019. And India is not really a vacation. India is like more so meeting with family. So this was one of those opportunities where I had the time to kind of sit back and not do anything, not really have an agenda for the first time in a long time. I got to wake up in the morning and just not have to worry about really doing anything. And that led to a lot of relaxing, a lot of eating, a lot of going out, a lot of just like mental stress that wasn't there in the usual grind. Still kept up with the markets every single day. It was on X, and there was so much to keep up with every single day. So definitely still enjoyed keeping up with the markets, and there's so much to discuss in terms of what has happened over the past week. But I think it was a good time to just have a break. You look like you're relaxed. Yeah, and I'm not even jet lagged either because I slept on the plane. We had 2 flights, one from Singapore to SF and then SF to Jersey. And so I didn't even sleep when I got back home yesterday at 8 a.m. I just like got through the day, slept last night, and I'm ready to go. I'm back in action, and it's exciting, dude. It's exciting to be back to doing what it's one of those things where like so many people message me like, man, I didn't realize how much the market open was part of my routine, and now you're gone and it's not really there, and it's like kind of moves my day off center. And like for me, it's the same thing. It's like it's part of my routine. It's what I've been doing for the past 4 or 5 years. It's something that I love to do. And so I think it gave me a greater appreciation of why I love to do it. The excitement I get from doing it, right? Like I just have so much ready to say. And when you can't say anything because you're not doing the show, it's like all that's just built inside of you. And you know what it really did? It gave me an appreciation for what it means to be a viewer. I think the biggest thing I learned over the past week as I watched Steve's show and other people's shows because I just had more time to like sit back and watch is like what it means to be a viewer, what you want out of a show, what you're expecting. And like, I don't think for the past 4 years I've had the time to be a viewer, because usually I'm streaming with Steve or Tanner or Chris or all these guys, and you're creating, and you kind of forget. You have to step back and be like, what does the audience want, and how do you like put yourself in their position? So I think this week was really important just to like sit back and be like, oh, this is what it feels like to be a viewer of this content, and here's all the different things that I should be able to do to make the show even better for so many of the viewers. So I'm excited. Shout out to Steve. He held it down for a good 5 days. He called me yesterday. He's like, dude, I love doing the show, but waking up early is a little tough. I was like, yeah, it's because it's not just if the show starts at 8:45, you can't just wake up at like 8 a.m. You got to wake up a couple hours early. Like I was up at 4:30 today, and I don't know, I think I was kind of on Singapore time, but you got to be up and you got to be ready to analyze the markets and have your stories and narratives and prep everything else. So it's not just you wake up out of bed and just do the show. You got to plan, and obviously it's not easy to do every single morning and stay dedicated to that. But I think Steve did an incredible job. I was watching him with my uncle every single day at 8:45 p.m. It also gave me an appreciation for all the people across the world that are watching at night. It's crazy. Like I imagine what my life would be if I lived in Singapore. I would basically work a graveyard shift. I would work 8:45 to like 6 a.m. and I would sleep during the day. And in some respect, I was like, that's kind of cool because then you have the whole day to yourself before. But it's also like you have to wait till the end of the day until the market opens. And most of the people that I talked to at the meetup, they said they wind down their day with the show. A lot of us, we begin our day with the show and see what's happening. A lot of people in Singapore and across the world, they're coming back from work, like my uncle. He opens up the TV and then decides what to do with his positions in the market. And so it's a totally different perspective, a totally different way of thinking of how people are consuming the content, which I also think was important to appreciate across the entire world. So it was fun, man. It was exciting. Shout out to my uncle and my aunt in Singapore. They they hosted me and my sister. We had a great trip. They let us stay there. I think for almost a week and a half, we stayed with them. And they also, my uncle planned a trip to Bali. So here's a picture of our hotel room. There's the Indian Ocean right there with the stock market charts, sun in the background. There was an indoor pool. It was a fun time, dude. To just sit back, be outside, be in the pool, not worry about anything, have the market open. Like it's one of those things where I'm probably going to experience once every couple of years. And so I was very, very grateful to my uncle for setting up the entire trip and making it happen. So it was a good time. And then we had the meetup, of course. That was also very, very fun. I posted a picture. There's a bunch of pictures posted on X, but I posted a picture a couple days ago of everyone who showed up to the meetup. I mean, the number one thing it taught me is, once again, all across the world, we're all the same. We all care about stocks. We all care about the markets. We all just want to improve our financial futures. And we're all a bunch of nerds that actually care about all this stuff. You had Saloni, who came from Australia. Absolutely crazy. You had Wong, Justin Lee. Lee, I've been waiting to meet for a long time. She was in Palantir at $7. We've been following each other for the past 5 years. So excited that she was there. Edison, Shannon, Randy came from Texas. Over came from Taiwan. Yogesh, Francis, Dexter, Sanjay. I mean, just so many of you that I've been seeing in the chat for years, getting to meet in person. And it's always a special time to the meetup. I think this one was very special because it was an international meetup. It was in a different country. And just to have 70, 80 people come out and actually spend the time, it was, we were there chopping it up for a good 6-7 hours. It was a fun time. Sachin unfortunately couldn't make it. He had some family obligations. He was thinking of making it. So hopefully next time we see Sachin. But Arthur came all the way from Arthur is the only person who's been to every single meetup so far. He came all the way from Los Angeles. You had a couple of people come from San Diego. The amount of people that traveled literally just for the meetup. Like, I think 2 people said they're staying for a couple of days and then they're leaving. Like, so it's not like they made a whole vacation out of it, but people came just for the meetup. It was really, really special. And so, yeah, it was a fun time. But we are back. I'm excited to be back. There is a lot to talk about, a lot to get into. Over the past couple of days, I've had a lot of time to analyze what's been happening in the global capital equity markets and form some opinions and theories on what's going on. Obviously, a little dicey when it comes to the AI trade markets. Micron's down right now, so we got a lot to get into. But overall, I'm just really grateful to be back. And yeah, it's one of the most exciting things to do this every single day, twice a day, and I want to continue doing it for as long as I can. But I think it was important to take that week off and just get more appreciation of what it means to be a viewer, so that I can make the show better and give my mind a little bit of a relaxing time as well. Just because now that I'm back, I woke up at 4:30 a.m. and for the past 5 hours it's been markets. It's just been like consuming information. So when your mind is constantly running, it is nice to have a little bit of a break. But we're back and we've got a lot to talk about. Thank you everybody for being here. I think let's get into it. It's been 7 days, so we got a bunch to get into, and I think it is time to officially get into it. Lucky, thank you for the $10 super chat. Appreciate you for being here. Sanjay, thank you for being here. Hope you enjoyed your time in Singapore. Thanks for the meetup. I love the community. Shout out to Todd, our new friend from San Diego at the meetup. The fact that Todd came from San Diego, it was just unbelievable. It was unfreaking believable. Shout out to Todd. Thank you for being there, and thank you to everyone again who's traveled to any of the meetups this year. Singapore will likely be the last meetup of the year. It takes a lot of work to plan these meetups, so we will start the meetups again in 2027, but I think it was a good one to end it out. And yeah, we will keep going from there, going into 2027. Please undo the top button. I can't do that. The top button is an Amit special. I had the top button on at the meetup, and a bunch of you guys from Singapore were like, Amit, you got to undo the top button. I'm like, come on, I can't do that. Like, this is even my sister was like, please, I get you're like cool and all on YouTube, but can you just undo the top button? I was like, no, this is like what she was just so embarrassed. But Felipe, thank you for being here as well. He just came all the way from Thailand. Felipe, now a good friend, has been watching the channel for the past 4 years. Great to meet you in Singapore, man. Thank you so much for coming out there. And just so many people we got to meet. Exciting time. We got a Singapore group chat going on. So great time meeting you. And thank you, Felipe, and everyone who came out to the meetup. All right, so let's get started. Let's get into it. Again, good morning, everybody. Shannon, thank you for coming out to the meetup as well. Appreciate you being here. A lot to talk about. You would have a girlfriend if you unbuttoned the top button. This is what I've been missing in my life. I've been missing that. Okay, those comments is what I've been missing. Thank you, Lisa. I appreciate that. That's some sage advice. All right, let's get into it. So, what is going on with the AI trade right now? I think we got to start off with Micron, and then we'll get deeper into everything else that we've got to do in terms of analyzing what's happening right here. I know Nvidia's down. I know we got a bunch of the other chip stocks going down. First of all, Samsung had earnings yesterday. Okay. And they were really good. The problem is they might have been too good. So Samsung's operating profit is up 1,900% year over year, $58.4 billion, beating the $55.3 billion expectations. They beat by $3 billion. Stock was down 9%. I think it's down 6% right now. As a result, Micron, SK Hynix, which we'll talk about as well, because they're going to be going public on the NASDAQ in a couple of days as well, are all down. The reason for this, if you want to get super technical, was because revenue for Q2 was a little bit lower than expectations. It's still up 130% year over year. Came in at 111.8 versus 113.1, so about 1.2 billion shy of expectations. But I don't think that's the reason why Samsung is down. I think the major reason Samsung was down, and it could be just a knee-jerk reaction, but obviously that knee-jerk reaction has led to a lot of volatility in the memory stocks. Micron now hitting a level that we haven't seen in a couple of weeks. This is usually where it bounces. It's at 933. I think got to 905 a couple weeks ago and then bounced. Usually it's actually been bouncing around like 970, 980. So it has been losing some key levels right here. Today we'll see if it is able to at least hold the 900s. I think the reason it's going down is because you just have this fundamental exhaustion, and that's not just with memory or Micron. We're going to talk about it in regards to all the other semi names: ARM, Broadcom, Dell, Nvidia. I mean, all of them are down. Software and hyperscalers are up, so maybe we got a little rotation that we'll talk about. But I think the market is just like, we figured out the memory trade. There's not maybe that much alpha left in the trade short term, not long term. I know every price target has them at $1,500, $2,000. I think that's very possible still if the sentiment continues to be excited around the chip constraints or the memory chip constraints in regards to the supply demand imbalance of Micron and Samsung and SK Hynix, et cetera. But in the short term, I do feel like it's a little exhausted. It got up to $1,200. It was obviously up almost like 250% year to date, still up a lot year to date. But I think people are a little, all right, this is the trade. It is what it is. It happened. And maybe we have to let this trade consolidate, which, by the way, Micron ends the year at $900 or $800. It started the year at $250. It's going to be a hell of a year for Micron. The problem is most of the alpha and attention of that alpha started to happen in the higher ranges, around 800 to 1200. And so you got a lot of people now that have bought in. All the analysts upgraded it after it went beyond $900. So you got the institutional investors potentially thinking of getting in, or maybe those analyst upgrades were exit liquidity for the institutions. Who knows? You just got a lot of people that want this trade to work. And when you have a lot of people in a trade, historically, it has nothing to do with Micron or memory. It's just the trade itself gets a little crowded. We saw when this happened to Palantir back at $200. By the way, we'll talk about that Karp interview. Unbelievable, the amount of attention that it generated and really shifted the entire conversation around open source models in Silicon Valley. So we'll talk about that. But, Palantir 200, everyone said they needed to own Palantir. And when everyone says they need to do something, you tend to get some short-term momentum to the downside. It would not surprise me if Micron cracks below 900 today. It would also not surprise me if Micron gets an upgrade back up to that $1,000 range, because, this is usually where it tends to bounce. I told this story on Steve's channel because I joined his show or his stream, I think on like Wednesday last week. But in the grab that we took in Singapore, and one of the 50 grabs we took, I will have a post on Grab coming on X soon, my reflections from the trip in Singapore, TLDR. My conviction continues to be strong. I understand why the stock has not done well this year. We talked about that extensively, but my conviction is very strong. It is an integral part of Southeast Asia after visiting Indonesia and Singapore and seeing how much it is used. And, I think we used it over 100 times with food deliveries and traveling and all this stuff. And I'm also going to put out a valuation model today as well on Grab, because I did some work on the airplane looking at what would it take to really get this stock to $8, $9. And in my opinion, it's not going to take much for them to get there, but we'll talk about that later as well. But in the Grab driver asked me and my uncle, because we were talking about stocks, hey, should I sell my Micron? And immediately me and my uncle looked at each other and we're like, oh shit, this is this is becoming mainstream. And not only did he say, should I sell my Micron? He said, I made 160% last month by playing earnings calls, AKA buying a stock before earnings. I lost 40% this month because I played Broadcom at 490 and this time it didn't work. And then he said, do you think I should quit my job? And this guy was like 70 years old and start trading stocks full time. And I said, how did you even find out about Micron? He said, I saw a Moo ad on Instagram that told me to, buy stocks, and that got me into Micron. And it's like I am all for people discovering the stock market. That's what we want as I think all of us in this community, right? We want more and more people to learn about stocks and take financial literacy and financial independence seriously. The problem is when everyone's talking about one trade, and the only reason you're talking about it is not because you're obsessed with HBM, high bandwidth memory, DRAM, NAND, flash. You're obsessed with making money because you're seeing something go up, and you're like, let me get in so it can go higher and I can benefit off that. When everyone is excited about it, it tends to say maybe the alpha has a little bit of a short-term momentum to the downside right here. And I think that's what we're seeing on Micron after Samsung had one of the best earnings they've had. I mean, Samsung has more operating profits than Nvidia. And this goes back to the point that we were talking about 3 weeks ago. Is the stock market actually going to allow one of Nvidia's suppliers to have better gross margins and now better operating income than Nvidia itself? I don't know if the market's going to be okay with that. I get the thesis behind the supply-demand imbalance that is forcing that, but there is also this quote called, "Your margin is my opportunity." And there might be a world in which the hyperscalers say, you know what, this margin that Micron has is an opportunity for us to cut back on, stop paying this memory tax. Now, maybe AI demand is just so strong that no matter how much they want to stop paying the memory tax, they're not going to be able to because, again, you're going to need more memory for agentic inference. But at the end of the day, I think the trade itself is starting to feel a little bit of pain. And that's why Micron's down. And that's why SK Hynix is down in South Korea. That's why Samsung is down. That's why DRAM is down. SanDisk, all those names are down. Again, I really don't know if this is the beginning of a trend that is really going to flip sour into July. July actually tends to be a good month for tech stocks. It's August through September that tends to suck. However, July over the past 5 years, although it's been good for tech stocks historically from 1950, for momentum stocks, if you look at the momentum ETF, it's been one of the worst months in the past 5 years. So momentum-based stocks, Goldman Sachs put this out yesterday, are having 5 standard deviations of worst performance over the past 2 years in the month of July, based on the historical precedent over the past 5 years that we've seen July have a bad month. And now June was technically a bad month, although June had one of the strongest ends of the quarter that we've had in the past 6 years. We've had the best quarter in Q2 since 2020. But that doesn't mean momentum gets a free ride going into July. And, Micron, Rocket Lab, all these companies are part of that momentum trade. So the question is just going to be how much the market is willing to allow them to continue. Yeah, Nebius, CoreWeave, all of those got wrecked. Now, Nebius and CoreWeave got wrecked for a different reason. Nebius, 298 to 205, not that pretty. CoreWeave, 130 down to 84, down about 2.5% both in the pre-market. We'll talk about Meta Compute because that was kind of the bigger reason for why the neoclouds got hit. But whether it's neoclouds, whether it's Texas Instruments, whether it's memory stocks, everything that is associated in that broader semiconductor universe, which is now 19.5% of the S&P 500. That's another reason I think the trade's just getting a little exhausted here. Doesn't mean the trade's over, but when every dollar you put into the S&P, 20 cents of that goes into semiconductor stocks, maybe there's a little bit too much concentration. Now, one might push back and say, well, Amit, every dollar over the past 3 years has gone into the Mag 7, 40 cents of every dollar has gone into the Mag 7. So you can't say that the concentration of the semis is more than the Mag 7, and that's fair because 20% is less than 40%. But the Mag 7, this goes back to the qualitative debate that we've been having for the past couple months, might be better businesses than historically cyclical sectors like semiconductors, which everything inside of it's not just memory, everything ends up becoming cyclical. It's just this cycle is lasting for a longer time. So if you've got people questioning the validity of that cycle, which again, I think is ill-founded given how much demand we're seeing for AI, although there are some questions, and we'll explore some of those questions today as well, then you're gonna have some people sell off those names, which is why, guess what's up in the pre-market? Google, hyperscaler; Meta, hyperscaler; Apple, hyperscaler; Amazon, up. It would be up more outside of the news that they just filed for $25 billion of issuances for bonds. So Amazon is looking for about $25 billion in more debt. We'll talk about that later. But even with a headline of getting ready to lever up to the tune of $25 billion, still Amazon is up. So maybe, just maybe, we're going to see the potential rotation into hyperscalers from the semiconductor. I think it's too early to say it because every time we think of saying it, Microsoft up in the pre-markets as well, people buy the dip on semis. And I don't know if this time has to be different. Now, this time feels a little bit more aggressive. Nebius is a couple bucks away from going below 200. Micron getting ready to lose that 200-day or that 20-day EMA. So, I mean, if it does lose those core levels, then maybe, you are seeing a downtrend form. But if they get bought up at these levels, which is where they tend to get bought up at, then maybe it's no different than over the past couple of months where these are just really good opportunities for investors to get more allocation. Rocket Lab is down right here because Sir Peter Beck filed to sell 5 million shares, which is, I believe, 10% of his holdings. So he's not selling 5 million tomorrow, but he is essentially filing for a Schedule 10-1B to eventually sell 5 million shares, and that's why that stock's down 1.8%. Rock Lab, that acquisition of Iridium was incredible. I mean, absolutely incredible. We'll talk more about that later. I thought it was so bullish for Rocket Lab and their eventual potential to compete with SpaceX, which we can segue into SpaceX right here. But if the CEO is telling everybody he's going to sell $500 million of stock, the stock's probably going to come down a little bit. And that's what we're seeing on Rocket Lab. All right, SpaceX. So today, SpaceX will be added to the NASDAQ 100. $800 billion of assets will be matched with pension funds, retirement funds, individual investors, institutional investors, hedge funds, all getting a little bit of a piece of SpaceX. Ironically, this is very ironic. Very ironic what happened this morning with the news of SpaceX getting ready to join the NASDAQ 100. Just like, I guess it was a little coincidence that for some reason, all of the sell-side firms came out and just coincidentally, on the day of SpaceX being forced into the NASDAQ 100, decided to issue some incredibly bullish price targets. You had Canaccord at 246, B of A at 235, Wells Fargo at 230, Morgan Stanley at 300. And then you had Raymond James say, hey, 11 trillion, why not? $800. I read the sell side report this morning. It is nothing special. I mean, I was trying to look for some deep analysis, something that all of us have missed, something that justifies an $11 trillion market cap in 1 year. All these sell side price targets are always 365 days out. I can't even believe they put an $800 target a year out from now. I mean, again, that would be double the size of Nvidia. Like, what are we talking about? It's just, you try to be optimistic, and then you're just like, no, someone called up Raymond and James and said, hey, we'll pay you a lot of money to put a nice little price target on SpaceX because we need some extra liquidity. That's what I think allegedly could be happening right here. I mean, 800 is atrocious as a 1 year price target. But I think the reason these price targets came out is because obviously with that NASDAQ inclusion, you want a lot of institutional funds. Not saying SpaceX has to go down to like $75. It's just realistically, even at 230, 240, you're talking about a $3.5 trillion company. And I don't know if the orbital data center thesis, which was the core thing that Bank of America and Raymond James said today, I don't know if that's enough to withstand the valuation, especially when the growth is not as aggressive. I know they signed a bunch of deals with Anthropic and Reflection for compute. The question is the profitability of those deals, which justifies how much of the NeoCloud EBITDA margins SpaceX should really get. But at the end of the day, they are joining the NASDAQ, and the question is just going to be how much the market's going to be able to absorb this. And this also adds to more volatility for what's happening with the space names. Obviously, they've taken a hit since the IPO, and Rock Lab right here, ASTS also down in the pre-market. Who is Raymond James? It's actually one of the most credible sell-side firms on Wall Street. So when I read the report this morning, and I was like, I had to double check, is this really $800? Because again, they're always 1 year targets. It's not like they're super big bull bear case. It's no. 1 year out, we think this thing should quadruple. It's like, okay, if that happens, you're going to have a lot of SpaceX investors that are going to be happy. But if that doesn't happen, the question is, what's a more reasonable target for SpaceX? By the way, one last thing I forgot to show on memory. Bloomberg put this out yesterday. This is another reason I think some of the memory stocks are getting hit. So they did a report on when the memory shortage will stop being in shortage. And they said by Q2 2028, so about a year and a half from now, they think the industry will be oversupplied. And so if you believe in that potential narrative as well, where, some people are thinking, all right, how long can these prices keep going up? Even with the long-term agreements that Micron has signed, how long do they really have the pricing power and the flexibility to maintain that pricing power? And then what new lines of businesses can they create with all the cash flow that they're generating? Or are they just going to buy back the stock? And do you really want to buy back a stock just because they're buying back their own stock? Is that really the thesis to stay long? I got a lot of those narratives in the memory trade right now, and that's why I think SpaceX is taking a little bit of a beating. On top of that, Kospi. Kospi was down 8% yesterday because of Samsung and SK Hynix. This is why Kospi, South Korea, is so unbelievably volatile. SK Hynix has $19 billion in single stock assets in terms of these leveraged ETFs, and it turns over about $4 billion a day. I mean, you have tens of billions of dollars a day that are turning over on these leveraged ETFs. And as a result of that, you've just got a ton of volatility that continues to exist in the system. And because of that volatility, I think that's why South Korea will go up 9% a day. It will go down 9% a day. And it's one of those things that, all of us kind of have to navigate, because that does affect the memory trade in America. When it affects the memory trade, obviously it affects the momentum trade in semis, and it affects the semis. It affects the indices as well. DocuSign, not DocuSign. DigitalOcean is up 15% right now. They just reported results. RPO will exceed 800 million. Wow, up more than 10x year over year. RPO expected to increase by over 550 million in Q2. That's up 16%. Q2 revenue was at 29%. Growth was driven by multiple 9-figure annual AI inference and customer cloud commitments. Company secured an additional 20 megawatts of data center capacity. Their total committed capacity is now approximately 155 megawatts. There you go. DigitalOcean. I think this has implications on Fastly, which is up 3%, probably on that DigitalOcean news, and Akamai. That is up 3.8%. All right, so DigitalOcean, that's a hell of a quarter. Multiple 9-figure annual AI inference and customer cloud commitments. We knew that Akamai likely has a $1.8 billion deal with Anthropic, so maybe Anthropic, OpenAI, Google, and Amazon potentially signing some of these deals with the other CDNs that are out there. And that's why DigitalOcean is up 16.4%. Kenneth says, I forgot how fast you talk. Well, we are back to speeding through everything that happens in the market. You know, that's the other thing I asked a lot of people at the meetup is just, you know, I always ask people, why do you watch the show? Like, what do you tend to get out of it? And you know, most people said it's just the amalgamation of as many different perspectives as possible, which I take a lot of pride in because, you know, that forces me to do a lot of research to bring all that stuff together. But that's also what makes it fun, right? When you can look at all these different areas of how the market is reacting and then try to break it down and make sense of it. But we got to talk super fast to be able to do that. So excited to officially be back. Trump. All right. So these Trump accounts, they're a big hit. It's helping our hoodie. Last time I left you guys, hoodie was struggling to stay above 100. Hoodie is back, baby. And she's trying to get back. She hasn't touched 120, but did she touch 121? I think she might have last week. She is really trying to get back over 120. And it is exciting to see because I feel like it is finally diverging away from Bitcoin.
I mean, the uptake has been tremendous. The aspiration from the beginning was to make this the best product that the government has ever been associated with. And we had 6 million kids sign up pre-launch and express interest. Millions of accounts have already been invested. And the app has basically been living at or near the top of the App Store chart. So it's continuing to accelerate. More and more people are downloading it, setting up accounts for their families. This weekend, the first investments started rolling in and the money started flowing in. And every newborn born after January 1st, 2025 gets an initial $1,000 for free seeded from the US Treasury. So this is a no-brainer for new parents, but also amazing for anyone under the age of 18. And there's 70 million individuals that we believe this could be the best mechanism for them to get ownership from a young age.
So this is really, really bullish for Robinhood. And the fundamental reason for that is because they became a government subcontractor. And because they became a government subcontractor, they got actual experience working with the government, building contracts for the government. And because they became a government subcontractor, they just developed a better relationship with the Trump administration. And hopefully for the administrations in the future, if they continue to initiate this type of a program, whether they call it Trump accounts or not, I'm not sure. But as a result of that, I think Robinhood is just going to have a better chance to keep working with the administration and administrations in the future for something that obviously makes a lot of sense. We want kids to have financial literacy, and $1,000 to a few million kids every year is a small price to pay in order to get people to be more into financial literacy. From the stock perspective, I think the market, Robinhood got a couple upgrades yesterday, a bunch of upgrades today, back up to 130. All the analysts that downgraded them to 80, $90 are upgrading them back up to 130. Yes, Q2 is really good. Prediction markets are going crazy. By the way, we lost the Belgian waffles. Really? That's what we lost to? Yes. I mean, didn't Trump make a call to the World Cup to like get our best player to come back? He couldn't have made a call to the World Cup last night to rig the game for us. Like, really? That was embarrassing, bro. That, by the way, I don't watch soccer games. I actually watched that Portugal game. I was bored out of my mind. It was 0-0 for 90 minutes. I'm like, this is like watching paint dry. It's a ball going from here to here to here. Like, why do people, like, I get it. Soccer is hype. Football is hype. But, like, it was unbelievable, dude. I felt bad for Ronaldo, but I was like, dude, 90 minutes without it. Like, how do people just stay, you know, my attention span could not. But anyway, the point is, Trump is obviously very excited about this. And the question is just going to be, you know, will these accounts result in more assets under management for Robinhood over time? And I think they will, but more importantly, I think the fact that Robinhood was chosen as the specific design partner to build out all the products and services, that is going to lead to more and more momentum for Robinhood long-term as a trusted partner for the US. And obviously, you got a lot of analysts thinking, wait a second, if Robinhood is this important to literally design the product for the US government, they're probably going to be more important outside of just being a financial institution, but like a very serious financial institution in terms of building out products and services for multiple governments, potentially across the entire world. And that probably justifies a little bit more of a premium.
With the Bank of New York, which is the nation's oldest and most storied bank. They're serving as the financial agent. Yeah, and we're operating this program at the lowest possible cost. We want to make sure that these children's accounts are invested for the long term, and they get to keep as much as possible of the return, so that compound magic that you were describing, really Albert Einstein described compounding as the eighth wonder of the world. I mean, the math is unintuitive, but you can see how even just the seed investment can multiply to large numbers. So yeah, we're proud to be furthering our mission and building a relationship with the next generation of investors. And I think Robinhood wins when the American economy wins.
And I think Vlad's right about that. The more the American economy wins, the more people want to trade, the more people want to invest. And obviously that helps Robinhood. Speaking of the American economy, the global stock market capitalization across the entire world is 165 trillion. This is why Robinhood getting this deal in America is so with the American government is so important for their perception as a brand, but also their potential to scale AUM into the trillions. Right now, they have a measly 350 billion. Schwab has 12 trillion. Like, there is so much more room to grow. Half of that 167 trillion of global stock market cap is in the United States of America. And so for Robinhood to be one of the, the sort of clear choices to work with the administration here, I think is really important. And that should hopefully, help them become a much more valuable entity over the long term. Trump, here is what he said yesterday about a variety of things. First, before I go to what he said yesterday, when I was gone, it was reported that he made $1 billion off crypto, $635 million off of his meme coin and royalties, and I think it was like $800 million in the stock market. When Trump was asked about that, he said something very simple. He said, look, I'm profiting from the stock market because everyone's profiting from the stock market.
I don't get involved in my personal. We have funds that run my money.
But you are benefiting.
Well, I've made a lot of money before I became president, and they invest my money, and I don't talk to them. I don't even speak to them. So I have many people, I don't know what they call it, closed accounts or something. You put your money in, and that's it. I don't talk to them. They're big institutions, and they run it. But yeah, I've had a great career. In business, I've had a great career. I don't know if I've had a better career in politics or business, but
So Trump just straight up saying, look, I'm making money because everyone's making money, so you can't be upset about this. And then this is what he said about short sellers yesterday.
we hit record highs, including today. A lot of you Wall Street guys, I see Larry and I see some of the biggest guys in Wall Street, David, Goldman Sachs, Blackstone, BlackRock, they're all here. And think of it, I'm making them all geniuses. Every one of them is a genius. Is anybody doing poorly? If you are, I guess you have a couple of guys that went short. Those poor bastards, I mean, they're in big trouble. They're being wiped out, the short guys. I never like short guys because they're betting against the country. So that's okay. But earlier this morning,
Trump does not like the shorts. I mean, again, as a stock market investor, this is really bullish to see because you've got a president that does not want the market to go down. It's like, I feel like we all have to remember it over and over again. Every time the dips get a little too dippy and it gets too red and, you start to feel that anxiety. It's like you have someone in the White House who is enriching himself, and whether you believe that's good or bad, that's your own prerogative. At the end of the day, everyone has different opinions on that. Pelosi, Trump, all the politicians. But if he's enriching himself and the politicians are enriching themselves, if you participate in capital construction within the United States stock market, you will also be enriched as well. The Dow Jones hit 53,000 yesterday. I mean, to Trump's credit, you had a lot of people saying we don't know if we could get over 50,000 over the next 4 years, and it's at 53,000 right now. So that feels bullish because you've got Trump being super excited about the markets and constantly talking about it and, having an incentive to make sure the markets go up. Literally, these Trump accounts are going to be ingesting another $800 million into the stock market this week as they fund all these new accounts. The bearish element of this is that maybe we're getting a little too excited. Now, what do I mean by we're getting a little too excited? Well, I think part of the volatility that we've seen over the past couple of weeks is due, in fact, because the market is wondering how much more can this actually be sustainable in terms of the level of growth that we're seeing in regards to the AI build out. The only reason the Dow is up, the S&P is up, the NASDAQ is up, and they're having these record years is because of CapEx. Make no mistake about it. In fact, I kind of think there's a new theory, which I don't think is some original theory, but I was thinking about it in Singapore. I don't think stocks are being priced on rate cuts. I don't think stocks are being priced in the labor market. I don't even think stocks are being frankly priced on what Trump says, outside of if Trump says to buy Dell. That stock. I mean, Michael Dell made a $6.25 billion investment into the Trump accounts. The stock is up about $250 billion in market cap this year. So, maybe the ROI he got is by getting really close to Trump, making that investment, and then Trump kind of touting Dell's brand. But I think stocks are being priced on CapEx. That's it. I think stocks are being priced on. If the CapEx story fails, it's talking about Great Depression. I'm exaggerating, but you get my point, right? And if CapEx goes to the moon, you're talking about stocks that are going a lot higher from here. SemiAnalysis did a really good report yesterday. We'll talk about the Meta news in a second, because that obviously I think was the biggest thing of what happened last week. SemiAnalysis put out a report yesterday, and they are assuming AI debt financing will become a multi-trillion-dollar credit market with over $7 trillion of debt outstanding by 2029, driven by both AI IT CapEx and AI data center CapEx needs for neoclouds. This will make it the second largest asset-backed debt market after the U.S. mortgage-backed financing market at just over $13 trillion. That was actually kind of scary reading that yesterday because, we all know what happened in 2008 with mortgage-backed securities. Not saying that's going to happen again. That was a different situation. But the fact that we're even approaching with data center debt financing the level of trillions that are into what every American is trying to achieve, right? That sort of American dream of buying your own home and, the government helping subsidize that with these mortgages, it is just incredible. Annual AI CapEx, including GPUs, networking, storage, and attached GPU compute, as well as the data centers to house AI compute, will be well north of $2 trillion in 2028. And cumulative AI CapEx from 2024 to 2029 will reach $11.1 trillion. Jensen said the hyperscalers, I think he said this last year, will spend about $3 to $4 trillion on CapEx by 2030. It looks like that number is probably an understatement. Now, not all 11 trillion will be the hyperscalers, but it looks like the hyperscalers could be doing 5 to 6 versus 3 to 4 trillion if the necessity of how much AI compute constraints are available continue to reflect in the CapEx guidance that we're seeing going into all these earnings reports when we get the CapEx numbers from big tech. And we're going to be getting more of those numbers in Q2. I mean, earnings are coming up in a couple of days, folks. We have the banks next week. So next week we start June 14th. We have a couple of earnings today after the bell, but June 14th or July 14th, we have all the banks. And then July 21st, July 22nd, Tesla and Google on the same day. So this time we don't have all Mag 7 on the same day, but July 22nd, in about 2 weeks, we get tech earnings. And the number one thing that I think people are going to be wondering about is CapEx. Now, why is that the number one thing? Well, CapEx is the economy right now. CapEx is the basis for how these stocks are being priced. But more importantly, Meta kind of really made people think twice about if this CapEx is going to continue to be sustainable. So last week, Meta said, we're getting into the compute business. If you've been a Meta shareholder, if you've been a Meta investor, like I have been this year, it has been painful. It's not been fun. It's hard to defend the stock when Zucks is putting out prediction market competitors. This is what you've been waiting for. You've been waiting for them to sell compute. It justifies their CapEx spend. It diversifies the line of business outside of advertising, even though advertising is enough for this company to be worth $2.5 trillion, but the market does not like AI ads as a single line of business, which is why Google, Amazon, Microsoft have better multiples. And if Meta can sell compute, theoretically, they can sell more B2B agentic services on top of their compute to those same clients using the cloud capacity that they built. So bullish, right? Well, kinda. It was bullish when I was thinking about it when Meta was down in the dumps and be like, man, Zucks just needs to turn into a cloud business. The problem is when you kind of go deeper into it, you start to wonder, has Meta overbuilt? Does Meta not have a use case for AI? Is Meta just basically saying, hey, the easier way to pump up the stock is by becoming a neocloud? I mean, look at Nebius, look at CoreWeave, look at Iren, look at, not Iren this year, but like over the past, Iren was $3 at one point. I know Iren's at, $40 right now and people want it to be at 80, but that thing went from 3 to 40. If you got in early, you made a lot of money. By the way, the compensation package for Iren, the $800 million of RSUs that they gave to the two co-CEOs, I think that's bearish because there's no performance attached to it. So they're just vesting 25% of hundreds of millions of shares hundreds of millions of dollars worth of shares every single year. However, I think people are being too bearish on it because I think the reason they're giving them that compensation package is because they're ready to announce a deal. That's my theory. I don't like it because it's like, why are you guys giving them free money for, no performance in any meaningful capacity over the past 10 months, or future performance. They're not, objectively held to that standard. But I also think people are getting too bearish because maybe they're going to announce a deal pretty soon. Maybe they announce the Golden State deal because they're getting ready to announce a really big deal with Anthropic potentially in Australia. Iran has data centers in Australia. Anthropic's looking for data center capacity in Australia. So maybe that's part of the reason for it. But overall, the neoclouds have fundamentally shifted their narratives, and maybe Meta wants to get that narrative. Maybe Meta wants to dilute like Google did, but they can't do it when the stock is getting hit right now. So they need to pump up the stock by changing the narrative from AI advertising company to AI infrastructure company. And then boom, the stock can get back up to 700, and then they can issue 80 billion of equity to be able to do whatever they want. Because again, Google did that when the stock was at all-time highs. I am not sure about how to feel with what's going on with Meta. I think Semi-Analysis did a really good article on it a couple of days ago as well. I recommend people reading. They think Meta's CapEx will be even more greater next year and in 2027. And it's going to be even more expansive in all the different things that they're going to be able to do with that CapEx. I also don't necessarily think they've overbuilt. I mean, Zuck said on the earnings call last quarter that, look, if we have some unused capacity, we'll be able to potentially create a compute business out of that. But that doesn't necessarily mean they've overbuilt. It just means they don't need all the compute that they're using, which as I'm saying that, it kind of sounds like they overbuilt. So even when you try to jump through these like intellectual hoops to make sense of it, it comes back down to no, maybe they overbuilt. I also am wondering the validity of Meta being able to compete with GCP, Azure, AWS. I mean, those companies spent 10 to 15 years building out their cloud services. Meta's never built out cloud. Now, I think Meta's more than capable of doing that, but are they really going to be able to win contracts over those other big hyperscalers in an instant and be able to make that profitable? Did I really say more greater? Okay, I meant to say more great. See, this is why I also need you guys in my life to correct me on the misspelling and grammar every single day. 2 minutes until the market opens. So what's the implication for the neoclouds? Well, why do we need Nebius? Why do we need CoreWeave if Meta has excess compute? That is the implication. I don't think that implication necessarily makes sense for the neoclouds. I think there's a much deeper story to what's happening with Nebius, with CoreWeave, et cetera. I also think potentially these are creating some really good opportunities. Let's just see how juicy these opportunities become. Roman, the co-founder of Nebius, was on a podcast 2 days ago. He said, even if you 10x the supply of our compute, we would sell out instantly. So you've got comments like that. Then you've got DigitalOcean putting up these massive numbers, increasing RPO 10x year over year. And you continue to believe we're compute constrained. But then you see Meta getting into the game and you're like, wait a second, is Nebius going to get more of these hyperscaler deals? Is CoreWeave going to get more of these deals if Meta is selling that excess compute? I don't think there's a black or white answer to this, but it's creating more questions than answers. And because of those questions, it's obviously leading to some of that volatility, which is why CoreWeave is down 15, 20% from the highs. Nebius, down pretty ugly from 298 to 202. We'll see if it goes below 200. I mean, Marvell was at 350 last week, or sorry, 329 last week. I think it got over 330 for a second. Now it's at 235. It's back to the same price that it was at before Jensen said they're going to become $1 trillion company. So you just got a lot of names in the semi trade that I think are taking a breather. The hyperscalers and the software names are benefiting. The question is going to be, will they continue to benefit, or do people buy the dip on semis? And I think this week will be a very important week to see if that officially ends up playing out. Also, Bitcoin getting a little bit of love. This thing was below 60 like 2 weeks ago. It was at 58. So nice to see it at least above 63 after MicroStrategy sold 3,000 Bitcoin yesterday. So even that wasn't enough to necessarily fully take it down. All right, here we go. 5 seconds. Thank you, everybody, for being here. It is great to be back. A bunch of people at the Singapore meetup told me they were no mute gang. So I need my no mute gang to stand up. Here we go, ladies and gentlemen. Tuesday, July 7th. The stock market is now open. I had to do the extra long bell today. You know what was so sad? My uncle's wife, my aunt, she said when she's in the same room as my uncle and they're watching the show, she ends up muting the bell. And I was like, really? Family ends up muting the bell? But whatever. It is what it is. Wake your asses up. Let's get into it. S&P 500. Barely a move right here. Really not doing anything, which speaks to how much this semi-trade is starting to get a little detached from the indices, because the indices are being held up because Meta is up 1%. Microsoft up 1.3%. Amazon is up 1%. Apple is up 0.5%. Google up almost 0.5%. So all the hyperscalers getting some love today. Tesla got an upgrade of $500 by RBC. Even Tesla, this was at $385 a week and a half ago. Now it at 418, actually got to 375. So 418 right there on Tesla. Nice little rebound right there again in that Mag 7 complex. Nebius, 203. That's down 4.7%. Nvidia, I forgot to mention why Nvidia was down this morning. There was a report from Reuters that DeepSeek is developing their own AI inference chip, which is going to lead to less reliability on Nvidia. And as soon as that news came out, Nvidia was at 195, then Nvidia down to 190. This is kind of confusing because I thought Nvidia wasn't allowed to sell to China. So, like, yes, DeepSeek is going to reduce the reliance on Nvidia, but in all seriousness, Nvidia doesn't even make that much revenue off selling to DeepSeek because they're not allowed to, supposedly. So I don't know why the implication of the headline was so negative for Nvidia, but I think the broader implication here is that Amazon building their own Trainium chips, Google building their own TPUs, Anthropic getting into custom silicon. OpenAI had 2 deals last week with Cerebras and what's the other company? Broadcom on their own custom chips, and now DeepSeek, the Chinese company, is coming up with their own custom chips. You've just got everyone that doesn't want to pay the Nvidia tax anymore, and because of that, I think that's part of the reason the market's a little afraid of those gross margins. Can they continue to remain at 75%, or have they peaked for the cycle if everyone's coming to essentially takes a little pie out of Nvidia's lunch and take some of their margin? Oracle right there, just disgusting price action. This thing was at 250 a month ago, right back down to 143. It was at 135 on April 13th. That was the worst day of the SaaS apocalypse. It's basically right back at that level. Netflix, that's up 1%. ServiceNow, speaking of SaaS apocalypse, that has started to make a little bit of a rebound right here, which is nice to see. 111 again. I think some of that rotation into the software names along with the hyperscalers theoretically could be happening right there. Palantir 134.27. That is green. Amazon 247, even after announcing $25 billion of selling more bonds. That is green. Zeta had a really impressive, I think it was like fireside chat yesterday about becoming more of an AI infrastructure company versus just an AI advertising play. Stock's up 2.5%, 22.38. This stock was $25 back in early June. So I don't think it's that crazy to see it get back above there, but it does need more of that software narrative rotation to, I think, make that big push. Google right there, 367, losing a little bit of its momentum. Shopify got upgraded by Bank of America to 150. That's why that's up. Bank of America resumed coverage on 5 different software names. The 3 that I saw this morning were Shopify, Figma, and Adobe. And it's so funny because it's like, as soon as the semis start dropping, the sell side is like, oh, let's go to the sector that's working. We're going to talk about software again. And so it's kind of, they zig and they zag. If software starts taking a beating, they'll probably go back to semis. But the fact that they resumed coverage, which means for the past 5 months, they didn't even cover the software names because they just assumed those names were dead and were not coming back. And now that they're finally resuming that coverage, it likely means sentiment, at least from an institutional perspective, is changing a little bit on the software stock. Shopify, one of the fastest growing software names that's out there, up 3.4%. And that's why it's liking a little bit of this momentum. Reddit, shout out to Reddit. 140, it was cheap. 200, I don't think it's as cheap as it was, but this stock was well over 250 for a few months. And so it definitely has room, I think, to play around in that range. I have to run more of my numbers, but at 140, 30% CAGR on EPS over the next 4 years with 70% revenue growth was really getting disrespected. And it's nice to see some of those names not get that disrespected anymore. But once again, Reddit is a software company, and that's, or at least is seen as a software company, and that's getting more of the love. Coherent, Photonics kind of came and went, right? I don't think the Photonics story is over, but man, the Photonics bottleneck that really excited millions and millions of people over the past couple months, it's in the gutter. Now, if you were super early to that, you're up a lot, like thousands of percent. But most people weren't super early to it, right? Most people got in Lumentum at 1,000, Coherent at 500, AAOI, this thing got up to 230, now it's at 118. There's a couple reports from Goldman Sachs questioning the validity of the Photonics super cycle, and I think that's what gave it a little bit of a breather yesterday. Nokia, that's down 3% as well. But you've got all these different bottlenecks, whether it's memory, photonics, packaging, etc. Wow, Micron down 7. My goodness. All of those are starting to result in a lot more volatility. Right here to the downside. Is Rocket Lab getting hit? Rocket Lab is getting hit. 87.60. Again, Peter Beck filed to sell 10% of his holdings, 5 million shares. And yeah, that'll do it. If the CEO is telling you he's going to sell $500 million of stock. So we don't know when that's going to happen, but the fact that it is going to happen, I think is enough for the market to be upset. SPY, that goes red as well. Nebius, are we below 200? We are, wow. No, we did. We touched it, 198.70. I mean, this is kind of incredible. Nebius was almost 300. Meta getting a little bit of a bid today. CoreWeave was pushing above 130, 84 now. Iren actually is held up. I know it's down 5% on the day, but it's held up since most of the neoclouds got hit. I think it was trading around that 50 range, but Iran has kind of been around 40 to 55 for the majority of the year. Nebius was it was looking like 300 was happening, and then Meta just came in. And the ironic thing is Meta has a deal with Nebius, and 15 billion of that I believe is guaranteed. So it doesn't necessarily seem like the Meta stuff is that bearish for Nebius, especially because there's a lot of synergies with them together. The problem is like the narrative is bad for the neoclouds if Meta continues to sell that much compute. Now, again, based on that semi-analysis article I read, I don't think it's bearish for the neoclouds at all. The correct take, in my opinion, is that this reinforces the business model of the neoclouds and only proves how much compute constraints actually exist. But you got to kind of look under the hood to be able to make that analysis and dive deeper, which is why the stocks are tanking, and that's what would entail someone buying the dip versus the headline that we are not as compute constrained. T1 Energy, that's down 6%. Enphase, that's down 1.3%. SoFi, which is held up. It's not at 15 anymore, 1850. That's doing okay. Netflix 7688 is Robinhood getting some love. We were at 117. We were at 116. That is red. SanDisk should be down. SanDisk is disgustingly down, 6.3%. DRAM is, as a result, taking a hit, down 7%. This is the dip that proves how much you believe in memory. I think a day like this is going to expose how many people truly believe in memory. I missed the memory trade. I'm really annoyed that I missed the memory trade because I had 2 people in my ear telling me that memory makes sense. In fact, one of my friends just bought a house in California for $2 million off of his Micron call options that he was down $200,000 in March, and now he's up like a few million. I literally bought a house yesterday, put $1 million down payment on it. And so, Micron's literally, making millionaires out here, and I missed the trade. I got it wrong, didn't really understand the thesis. But now the question is, okay, the thesis is known by everybody. Do you take this dip as an opportunity? If you're long, do you add exposure here? Because the forward PE on Micron is below 5 at this point, now that it's down 6%? Or is the trade a little long in the tooth, and it's going to take some time for this to become as obvious again, or not as obvious again, and that requires a lot more price discovery to the downside in order to make this actually more attainable for people. Amazon 245, Microsoft was at 350 2 weeks ago. 350, 393. AMD down 6% as well, 511. Didn't this hit all-time highs yesterday? Or it hit it hit all-time highs, right? 584. So just one day it's all-time highs, the next day because of a Samsung's earnings that's not as good for the entire memory sector, even though the earnings were unbelievably profitable, right? More operating income than Nvidia. It's enough to take down the entire momentum trade, which is why you're seeing AMD get hit right here. D-Wave, that's down 3.5% as well. And again, the money flowing back into the hyperscalers. Meta at 611 as all the semis, pretty much unilaterally, all the semis. Yeah, there's not one that's green. Broadcom down 2, ASML down 5, Intel down 7. Intel was 140 last week. SMCI down 2, AMD down 7, Nvidia down 1.7. Nvidia actually up a little bit from where it was in the pre-market. So that one maybe has a chance to get back to 195. And then Micron down 5.5. Rock Lab down 5% as well. Oil has been coming down. Today we are at 69.59, so it's up about 1.5%, but overall oil was down. There were some reports of an Iranian attack in the Strait of Hormuz yesterday. Axios is reporting the United States will have to retaliate on that attack. I thought we had signed a negotiation agreement, so I'm not sure why we're still attacking each other. By the way, this is the second attack after the negotiation agreement that we're going back and forth. I don't even know what the implication is anymore for the markets, and if the markets even care, but nonetheless, that might be something that we have to keep an eye on. Now on Reddit 205, that goes green. Shopify 125, that's up 4%. That is also going green. I'm thinking of I'm getting deja vu from when Micron went from 470 to 320. I don't think that's a crazy perspective at all, because Micron from 1200 to 920, I don't have the exact multiples in front of me, but if Micron's trading below 5 times, which I think it is, can someone check the forward PE? I think it's below 5 right now, or like 5.2. It was at 6 at 1,000, right? Then that is very similar to when it fell from 470 to 310, and the forward PE was like 3.4, and the PEG is like 0.02 or something right now. So, and that was a great buy. Question is, will this time be exactly similar? If sentiment kind of reverses. And I think you can't put, sentiment seems kind of negative right now around the semis, but man, can it switch pretty quickly. And we've seen, I think, 5 or 7 of these dips over the past 2 months that last for a day, maybe 2 days, based on some erroneous macro report or headline or whatever, and then they just get bought up. The software and hyperscalers have had the worst sentiment all year, and those are starting to finally change. But the semis, whenever they've had even an inch of bad sentiment, they got bought up. And I think that could easily happen again if the markets come in. 6.3 times forward earnings. Okay, so not below 6 times, not as cheap as it was in March, but I mean, for a company growing 650%, even if they grow 30%, would you pay 6 times forward earnings for that? Probably. Unless you think it's cyclical, which once again goes back into that same debate that you either believe in or you don't believe in right here. Would you rather go into DRAM than a single memory name? Actually, yeah, I think DRAM theoretically is easier than tracking all the memory names together. So yeah, I mean, honestly, if I was going to buy memory instead of having to pick one of them, they all move in a pack. Western Digital, Seagate, there's very minute differences between all of them in terms of price action. So I think buying the ETF is probably just an easy way to get exposure to the sector. SanDisk right there down 7.5%. As well as that's getting hit. We will have Technical Tuesday today, correct? We will have TT today. Keel, this one got hit as well. This was at 7, now at 450. Again, I think a lot of people are excited for this one, but until they get a deal, they're kind of stuck in a similar situation like Iran. They need a deal to get re-rated. And until they get that, if all the neoclouds are getting hit and you don't have a deal, it's going to be a little tough to get the re-rating that the street needs for people to be back in excitement around the neoclouds. Microsoft, wow, what is that red candle? 393 to 389. If Microsoft goes red today, I would not be surprised to see some of these semis go green, because once again, it's been semis down, hyperscalers up, hyperscalers down, semis up. Amazon getting a green candle. Apple just went red. Google holding on 370. That one's not really flipping red. Grab almost at $4. I think it has a shot. Dara leaving the board of Grab yesterday. He's the Uber CEO. That's actually really bullish. That needed to happen for Grab to get the regulatory approval for the Food Panda acquisition, because they compete with Uber in Taiwan. So that is not something that's to be seen as bearish. And in fact, Uber still holds a very large stake in the company. That's kind of what had to happen in order for them to get the acquisition done. So I think the stock falling 5% yesterday on that news was kind of a knee-jerk reaction. But oil coming down, I think, is the big catalyst for Grab, and we'll see if we can get back above that $4 range. BlackBerry, this one has had a massive run from $2 to, I think it got to 13 at 10.98. Met a couple people at the meetup that have been long the BlackBerry thesis. Obviously, the robotics part of this thesis has made a lot of people excited, along with the general sort of AI software play with the QNX platform. So I think there's a story in BlackBerry. It's just, again, it's going to move, I think, with a lot of the volatile names that are in the semis trade, even if it's not technically a semiconductor stock itself. Ondas, that's 778 as that goes right on the day. I think Ondas diluted yesterday, if I'm not wrong. Maybe I am wrong, but this company has fallen from 13 primarily on multiple different business deals that they announced. All those business deals have to either do with equity issuance or some type of bond offering. Now, they're qualitatively, they make sense because it allows you to amalgamate more businesses inside of a single drone stock, or at least a drone company. But it requires shareholder capital to actually finance that stuff. It was a weekday, so yeah. So it makes sense why Ondas getting hit. Qualcomm's Investor Day was super bullish. Like, I walked away thinking, man, that was bullish. I bought a little bit of Qualcomm for the first time last week at 186.50. Stock's at 185. I think it fell all the way to 174. I saw the Investor Days. The stock went from 240 to 186. I think that day was at 220 down to 186. I mean, they're projecting $40 billion of AI data center revenue by 2029. So it is one of the cheaper semiconductor stocks that are out there. It's been well above 200 for a large part of this year, ever since the sort of momentum narrative changed on semis. Marvell right here down 5%, and that's why I think it took a hit. But I thought the Investor Day was bullish. I thought it made sense. I haven't bought Qualcomm all year. I think 186 is somewhat of a deal. Could it go down to the 160s if the whole semi trade gets hit? Sure. But at that point, Micron's going below. Like, again, Micron will be below 900 if Qualcomm is in the 150s, if AMD's in the 450s. Like, they're all, at this point, if you're long one, you're kind of long all of them. There's going to be some small differences, but if you're long ARM, you've got to deal with the volatility of Micron, because Micron affects the sentiment around ARM and CPUs and the entire data center trade. The only one that's not moving with them that much is Nvidia, because Nvidia doesn't move that much because it's just such a big company. But Nvidia has spent the past week, well below 200 at this point. As this one's getting hit. Meta, are we green? Meta 612. Okay. So some of the hyperscalers getting some love. Meta was at 650 the day they announced the compute thing. And so it makes sense to see them right here get some love at 612. Again, as a shareholder, this is what I've been waiting for all year. The problem is, like, is this enough to keep the market excited about what Meta is doing? Oh, Michael Burry is short Caterpillar, and he is short what's the other one? He's short Micron. Short Caterpillar, short Micron. So you've got Caterpillar right here down about 4%. You got Micron. He's shorted at like at 1,025. So you're getting some more of the shorts into this name now. Micron right there down about 6% as those trying to get a move. Cerebras also took a big hit last week. It's that wow. So Gavin Baker said this on the All In podcast. I thought it was an important thing to understand from an IPO perspective. I mean, Cerebras, it's below its IPO price. Once you get below your IPO price, I think it's really tough for the street to be super, I guess, excited to buy your stock, because all the underwriting, assumed Cerebras would not go below 185. And now that it's below 185, I think a lot of people, it's like an unspoken rule in the industry, right? You're not supposed to go below your IPO price. Otherwise, the institutions just like lose trust and they just dump it. And so I think that's what's hurting Cerebras right now, is that stock is down about 6.3%. Meta 614. 614. Let's see if it can hold on here and get some more of that momentum. David Tepper's hedge fund returned a significant amount in the first half of the year, 32%. His primary bet was indeed Micron. Now, is he selling Micron now that he already delivered those massive returns in the first half of the year? We don't know. We'll find out in the next 45 days. But a lot of this trade, again, that's the thing. The friend who bought a house in California on a lot of his Micron profits, the thing that he was telling me yesterday is just, he thinks a lot of people are being greedy here and expecting more and more from the trade. He's like, dude, the trade happened. Like, it's done. Like, there's probably more upside, but in the short term, people are being very greedy, expecting this thing to get to 1,500 tomorrow when it just went from 250 to 1,200. And so maybe you have some of the big guys like a David Tepper, like a Stanley Druckenmiller start to sell some of their position just to be able to lock in those profits as good fiduciaries. But that could also be some, selling pressure on the stock as well. Palantir 134.49. So we will talk more about Karp's interview. I did see it live. I had to watch it twice to really understand how important it was. All In, which is one of the biggest tech podcasts in the world, spent 30 minutes discussing what Karp had to say. That's how impactful it was. I think Karp really got a lot of people to think, holy crap, what is happening with the foundation models? And are these foundation models essentially just stealing intellectual property from businesses, not actually giving them any value, creating any value, or else they would be pricing on value, not pricing per usage in terms of compute? And are the open source alternatives way better, not in terms of performance, because maybe there's a little bit of disparity and a delta between the performance of the open source models and the actual value of the frontier models, but if they're, Chamath said on the podcast, one of his companies saw a 16x reduction in costs. I mean, maybe it's not Fable 5, but if it's 16x cheaper, every CFO on the planet is going to start to say, hey, we need to take this seriously and see what happens if we need to switch. Now, the pushback against what Karp said is that for everyone to engage in on-prem GPU cluster buildouts potentially is unreasonable. You're going to have a lot of people that don't want to be responsible for essentially building their own mini data center. And you're also going to have a lot of people that just want to sign up with the APIs with the hyperscalers and let them, do what they need to do so that there's not as much pressure to build their own compute stacks. And I think that's a fair criticism against what Karp had to say, because obviously that's going to be some pushback. And I think even Karp acknowledged that as well. But his broader philosophical point was, why are we letting the foundation models charge as much as they're charging without producing any value? Whereas the orchestration layer of whatever LLM you pick, by the way, Fable 5 got banned. Imagine all your critical resources were running via Fable 5, and then the government bans it. And you have no other model to switch to because you're locked into Anthropic's ecosystem. Like, that can get really dangerous really quickly. And I think Karp's broader point is, like, open source alternatives that are just as good, but but significantly cheaper, orchestrated through the application layer, is where the real value comes from. And that's what we as an industry need to have a better understanding of. Now, that's bullish for Palantir. The problem is, one could argue it's bearish for the AI trade, because if everyone agrees that, the frontier model
the Frontier Foundation models aren't worth it much, or we want to continue, not paying as much as we're paying, then where's the margin for Anthropic and OpenAI? Granted, multiple reports say that Anthropic is already gross margin profitable and OpenAI is struggling a little bit more, but eventually by IPO they will be profitable. But if everyone switches to a different model, the capex from these hyperscale or from these foundation models, that is essentially 50% of the backlog of revenue for Microsoft, Google, Amazon, and the Broadcom's cloud offerings. All of that stuff is tied to OpenAI and Anthropic. And so if that goes away, you've got a big issue with the entire trade in general. So I think the Palantir argument made a lot of sense. And I think what Karp was saying, it got everyone talking. And for all the negative PR that Palantir has been associated with for the past couple of months, it was nice to see everyone kind of agree with Karp over what he was saying. The problem is it makes people wonder, how much the AI trade would be in jeopardy if open source ended up winning, which I don't think it would be, because you would have a lot more compute. And that's what Nvidia said. We'll talk about Nvidia's response to the open source stuff last week. But I think Nvidia is actually a champion of open source. And if you have more open source models, you still need more compute, which means the semi trade theoretically stays intact, even if the margins on the foundation model companies aren't going to be as strong. Google right there, 372. That's green. That's actually having the best day out of all the Mac 7. That's up 1.65%. SMH was at 630 last week. It is now at 577. So you're seeing SMH take a bit of a beating right there, down about 4.3%. And Meta is trying to break 614.50. We break 614.50. Meta might have a date with 620 here. It was trading at 625 last week on the initial news. Then it sold off for a couple days. Let's see today if it can come back. 612.30 right now on the day. Cerebras IPO price was kind of predictable. Half of that is now in play. People have never experienced IPOs before. That is fair. The problem is the sort of hype cycle around the chip stocks was really high when Cerebras was at 385. And it's still high, but not as high. And 50% reduction on a name like that just creates a lot of bag holders, and it's not just retail. Institutions are holding the bag on this. And they're likely not happy about that, especially if their liquidity was supporting the IPO in the first place. ARM right there, that's down 5% as well. Nvidia now getting hit at 1.2. Ironically, the more ARM and SanDisk and Micron fall, which SanDisk now really falling down 8%, the more I think Meta and Google should be going up today. I think we actually might see a legit reversal right here, or a divergence. Micron lows of the day, folks, 915. SpaceX, are we down? We are down 4%. So all the space names, Redwire was at $25 2 weeks ago. It is now at $10. Again, a lot of these just got absolutely destroyed, but that NASDAQ 100 inclusion is probably more of a sell the news, I think is what we're seeing right here. ASTS, that's down 5% as well. And those are going to hit. Rivian got to $20 yesterday after they announced dilution. So Rivian was having a great day until they announced dilution. I think it's about 1.4 billion of dilution. And that was enough to say, okay, we are dumping the stock. As now that's down 12%. Marvell, wow, 231. Broadcom, 366. Now Marvell, again, I said this 2 weeks ago. I don't understand why Marvell was ever trading above $300. Like, I get that Jensen thinks it could be a $1 trillion company, but the numbers don't really deserve, I think, Marvell to be even close to getting priced at that level yet. Having said that, I don't think it's falling because the street woke up and said, oh, Marvell shouldn't be worth $300. I think the street woke up and said, we're selling off semis. Like, it's nothing specific with Marvell at all. But those names that went up the most are obviously facing the majority of the decline right here, as sentiment potentially might be changing. Do people actually believe sentiment's changing, though? I mean, the price action showing sentiment is changing, but like, do people legit believe we're going to go through more than, 2 days of real weakness on the semis? It's literally been, I think, 2 days max, maybe 3. We had a 3-day stretch a few weeks ago after that. No, we didn't. We had a 1 day. No, it was a hot jobs labor report. We went down on Friday, and then Monday we went down. Then Wednesday we recovered. So, I mean, it was kind of choppy, but it wasn't like 3-4 days in a row of straight red. 54% of you said green on the poll today. It's just the levels we're reaching now are pretty intense compared to that 3 weeks ago. Like Micron 912 right here after those earnings. I don't know. If it goes below 900, how much do people just say, screw it, this is a dip to buy, or we're going to take my profits and get out? Robinhood now going red, down 1.8%. Rocket Lab down 8% as well, as that stock is getting hit. Iran, that's down 6.8. CoreWeave, that's down 8. Nebius, there she goes. All right. Below 200. It is happening. Below 200. It is indeed happening. Martin says, I think this is a healthy pullback. I would agree. No one likes to hear that it's a healthy pullback, but, you know, Nebius at 300, CoreWeave at 130. Those are great companies. I think they're going to be amazing long-term bets. I don't know if they deserve to be at those levels, you know, last week. And again, Nebius, even if it falls to 150, still is up a lot for the year. It's just the problem is, you know, you could say that theoretically, but a lot of people bought many of these names, not just Nebius, you know, at closer to all-time highs. I mean, the amount of people that probably got into Dell as it was pushing 490, you know, now it's at 407. It was below 400 last week. Like that's not fun to be sitting on those shares. And the fear here, I think, from a bag holding perspective is if the trade's actually done, like legit done, then you're bag holding those shares for a long time. Like you need a real sentiment shift to get the Dells and the Marvells to get anywhere near the levels they were at a while ago. But then again, if the earnings growth continues to be as strong as it is, then we shouldn't be afraid of eventually getting that momentum shift. It's just short term that's obviously painful. And that could create, you know, a bit more volatility right here. Palantir 133, that one also going to get, all right, Meta now falling. Meta, where are we at? 610.50. Let's see if Meta starts to fall or the other hyperscalers falling with it. TE, this is solar panels. Wow, down 10%. This was an energy play on the semis more than anything. Again, you either see this red today and you say, oh, great, I'm going to go shopping, or you see this red and start to get a little nervous that the trade is, the AI trade is weakening, or I should say the semiconductor trade is weakening, which I should say the bottleneck trade, because essentially, you know, most of the semis are part of a bottleneck of compute constraints more than anything else. And again, every time someone has felt, oh, I'm nervous the semi trade is dying, the dip buyers step in. So I feel like you need multiple days of real serious continued red. And last week you had some of those, but then it got bought up. So I think today, as we start off, you know, yesterday was a little bit, actually no, Micron was up yesterday. Micron fell after the Samsung earnings after hours, but Micron ended 2% green yesterday. So today is kind of the first day of the week where we're seeing real red, 4 to 5% down. We've got to see if that continues. Is Verizon up? Verizon is up 3%. Verizon is indeed up. Amit, are you officially back? Yes, I am officially back. I'm back. And I am very, very, very excited to be back. Mary, thank you for the super chat. Deeply appreciate you, Maritza. Happy to have you back. We will be more appreciative from now on, right, chat? I think the same jokes will my uncle was like, dude, why does everyone think you're gay? I'm like, I don't know, dude. I don't know. I just like, it's like the amount of times people say it's like I don't know. I expect nothing less than those same jokes to continue. Here was Mike Wilson on Bloomberg yesterday talking about this divergence between the hyperscalers and the semiconductor names. He is still bullish on the semis, but he thinks there's going to be a little correction in the summer.
Yeah, I mean, there's a symbiotic relationship between the spenders and the beneficiaries, and typically they trade sort of in lockstep. And a couple things we've been writing about for the last several months. Number one, CapEx to sales. That particular factor has been straight up since the Big Beautiful Bill was passed, right? That basically the government's incenting businesses to spend money today rather than later. And so that CapEx to sales factor has been driving a lot of stocks higher. That looks like it's peaking now. And by the way, the hyperscaler stocks started to trade poorly about a month and a half ago and into this idea. But that's not sustainable. You can't have the spender stocks trading poorly and the beneficiary stocks continuing to go straight up. And now,
AKA, if Meta's spending $150 billion on CapEx, Meta can't be falling 2% every other week, and SanDisk and Micron go up 2% every other day. Like, at some point, it's kind of getting stupid here. And so Wilson's argument is we're probably going to see that divergence start to become more real, even if the semis take a little bit of a breather. Or if the semis don't take a breather, the hyperscalers at least should stop going down as much because, again, they are the reason for the semis going up because they spend all the CapEx.
what we saw last week, Meta announced that perhaps they're going to sell some excess capacity, maybe turn into a provider of capacity. That is just a reason for these things to take a break. Also, peak rate of change on revision breadth, right? The memory stocks, the revisions have been spectacular, but they can only go so high. So all of that's kind of happening at the same time. And I expect the hyperscalers now to stabilize. That's what's going on in the last couple of weeks. And the semiconductor stocks are going to correct. That's a good development. That doesn't mean the CapEx cycle is over, but that ebbing and flowing between the two is a natural kind of governing factor, because you can't have this divergence continue. It's unstable.
Your words, take a break. That's interesting. Some people have called it a narrative shift for the overall trade, and maybe a shift in spending too. Why is it one and not the other?
Well, we don't know for sure, but we've had 3 of these already, John. So since ChatGPT was announced in November of 22, we've had 3 of these sort of mini cycles within the broader structural CapEx cycle, which is that the market starts to question, the return on capital isn't good enough to support this kind of CapEx. What happens then? The stocks trade poorly. And then the CEOs of those companies come out and say, well, maybe we won't spend as aggressively. And then it ebbs the other way. And so that's the story. That's the dance back and forth. Now, there is going to be a time, we don't know when it's going to happen yet, where the CapEx cycle will exhaust itself. And we will have, we've talked about this, that there is going to be malinvestment here. We don't think that spending cycle is over, because they just started raising the capital in the credit market. So they're going to spend the capital. Okay. So, but we can have these mini cycles in the structural bull market of capital.
So this is what semi-analysis said as well. And I think this is a really important point, which should potentially calm some of the anxiety around the AI trade. The hyperscalers have already committed, either through equity bond issuances, Micron getting a little recovery from 909 right there, now 923, still down 6% today, and from levering up their balance sheets, Amazon getting ready to do an 8-part bond sale today for $25 billion, to spend on CapEx. So like, if you sell off the semis because you think CapEx is slowing down, but all the hyperscalers have told you in every possible way they could that they are committed to spending more CapEx, then why should the trade be over? Or why should the sentiment necessarily be dead? Now, again, to Mike Wilson's point, he thinks that the overall trade is intact. It's just that obviously the sentiment is going to shift because markets are moody. And so you're going to have some of these opportunities right here where things go down and those potentially become opportunities, or those become moments to rotate and have exposure to different sectors like software or hyperscalers, or even consumer discretionary, which has been doing well. But it doesn't mean the trade is done. And obviously that trade is very important. Why is that trade really important? Well, it's holding up the entire market. But on top of that, take a look at 0 DTE option volumes. They now account for 48% of total retail volume. And I have a funny feeling that retail is not buying options on Verizon. They're buying it on the semiconductor names. The 2022 high was 18%. The average over the past 5 years is 21%. The percentage has now more than tripled over the last 5 years. So part of the reason whenever we have this hesitation in the semiconductor trade, people get scared, is because there is so much volatility, so much leverage in the system being placed on these names. We saw Micron was the #1 stock that was bought in May in retail, $6.5 billion. Like, retail is believing in this semi story aggressively. And as a result of that, there's tons of liquidity out there. But that means the semis need to go up, because if they don't, one of the deepest pockets in the market is going to be essentially bag holding a lot of these names. Now, granted, a lot of people got in these names before the run up over the past couple months. So, there's people that got into AMD at 100, Nvidia at 50. So like, a lot of people are still up thousands or at least hundreds of percent on their names, even with this like mini downturn, as semis are down 15% over the past 4 days. But there's also a lot of people that got in, in the last 15 days, which is not the best. SMH right there, 575, as that continues to go down. GLW, so can someone explain to me why they went to 250? That was like on Wednesday, right? They got to 271. Did they announce some big deal? Because I didn't see something that justified them going up like 30% in a day. But I was excited for Jason. I was like, holy crap, like this thing's almost going to 300. And then, the semis fell and then this thing fell. But yeah, there's these bursts of momentum and excitement, and then they kind of just die out if there's nothing real there. I don't think they got a new hyperscaler deal. There was something that happened. Nvidia did invest in them. That news was relatively old though. So you know, but it's not just Corning. A bunch of these names had that burst. I mean, SanDisk got almost above 2,300. A lot of these names, or Val was trading at 303 last Wednesday, now at 230. And then they all got hit. Evan says wearing the top button is actually crazy. You are not alone, Evan. You are not alone, Evan, who feels that. Rick, thank you for the super chat. Welcome back, man. We all need your voice and Logic's in the morning. Please do not take any more days off for the rest of the year. Yeah, I will most likely. I mean, I might miss like a couple days for the rest of the year, but there will not be any long, multi-week, multi-day stretch of no shows. I think 1 week is enough. You do it, you relax. But by the end of last week, I was ready to get back. I was itching to get back. So I am happy to officially be back. Broadcom right there down 2. SpaceX down 4 now, as that is getting hit. Yeah, even me being back, market's red. I know the joke is when Amit leaves, the markets go down, but I'm back and the markets are still red today. So even I cannot really have an impact here because it looks like the momentum trade just wants to take a bit of a break. The Q's down 1.6%. Meta's really fighting right here to get above 614. I think it might try. Every time it gets close to 612, it gets rejected. Google, on the other hand, not having any issue in the 370s right here. Crude is still up a little on the day. How's the food over there? The food was incredible. I ate a lot of different types of food: Thai, Chinese, Indonesian. So the food was amazing. It was one of the best parts of the trip. But it's also like, dude, you're eating out every day. Like you want to kind of get back to a routine. And my stomach didn't get upset. That's the one thing I'm happy about. My stomach didn't get upset. Usually, when people travel, they just don't know. But my stomach was fine for the trip. It's just I don't want to eat out for like the next 5 months, dude. It's a lot of eating out. Ouster LiDAR robotics play. They got up to 65 and they did what Rivian did. They did an offering. Unfortunately, got a lot of retail holding the bag on this. This is not an institutional stock. This is less than a $3 billion market cap. That offering trapped a bunch of people, so that got the stock hit. And then this massive level of hype around CCXI, I am just confused with. I am very this is a SPAC for Agility Robotics. I'm not going to talk too much about it because I haven't done too much research on the name, and I don't have a position. All I'm going to say is this. Why is a humanoid robotics company going public via a SPAC when the hype around humanoid robots as the next physical frontier of AI? I mean, even Micron said that robots are going to create a multi-decade tailwind for demand for memory. Jensen's been pumping robots every single GTC. He has these little robots on stage. Why would a reasonable robotics company that has revenues and cash flows and like trajectory to go and get people excited have to go to retail to get people to finance why couldn't they raise a Series D round of financing just like Aptronic raised a Series B at $5 billion a few months ago? And by the way, why the hell is Agility worth almost as much as Aptronic? I mean, like it's just one of those things where it's like I'm confused about the excitement around a humanoid robotics play outside of humanoids are next. It's like, yes, robots will be very important, but at what point do we start to question what type of company is being taken public via a SPAC? Also, does that not freak anybody out that SPACs are back? Like this was not a good sign when we had these special purpose acquisition vehicles take random no-name companies that anyone was willing to buy off any random hype that they saw into it in 2021. And so I don't know. It's a little weird to say the least. I have no position in it. I think it's going to pump. I think the stock will pump when it goes public. Right now, it's still the SPAC because retail just wants to YOLO into a public humanoid play, and there's no public humanoid exposure. And I get it. Figure Aptronic, they're not public, but I just don't know if these physical AI plays. Like I've talked to some of my humanoid friends that are early investors. They really don't like that they couldn't raise a round of financing in the private markets because there's so much money out there, so much money. If you can't convince some forget A tier VC, some F tier VC to give you 30, 40, 50 million bucks as a robotics play in the age of AI, then it's just a little confusing, So humanoid friends, as in friends that have invested in humanoids, not actually robots that are my friends. Although that'll be a big purpose for humanoids to to become your friend. Marvell, that's down 8. S&P now. There she goes. 0.5%. That might take the hyperscalers with it, but it's not. Meta's still holding on. Google's still holding on. I mean, really, it's the semis that are, I think, dragging the S&P 500 down. As opposed to your LLM friends. Yes, exactly. As opposed to Claude and GPT and all those guys. Amit, can you unpack this for us? Why did Samsung fall 10% after forecasting a 19x increase in operating profit versus a year ago and estimate earnings higher than total profit over the previous 3-year combined? When you see the headline, it sounds crazy, to your point, why Samsung is down 10% after operating income is up 1,900% year over year. The problem is the stock is up 250% this year. Now, that shouldn't stop the stock from going higher because the multiple has become significantly cheaper. But once again, as Meta trying to get that breakout over 613, once again, it's like, I think the trade has been discovered on memory. And because it's officially discovered, you just have so many people in it that you got more people saying, well, why should I stay if the alpha is not as unknown here anymore? Which is why people are going into robots, because they think that's the next big trade. But like the companies that you should be betting on, I don't think are public yet in the robotic space, at least not the humanoid space. Corning down 6.5% as that one goes down. Oracle 141 as that one's also getting hit. I think Oracle, CoreWeave, and Nebius I think they are, look, I think they're buys here. I mean, they've gotten hit pretty aggressively. And I don't know, man. I think, or is CoreWeave really going to $50? Is Nebius going back to 130? Is Oracle, which bottomed right around this range in April, is this going back to 100, 125? Like, it feels like the momentum has taken its course, and these names have been chopped off so much. But another way to kind of play these names instead of buying them is just to sell puts. Now you got to be happy owning CoreWeave at 75 if you're selling puts at 81 or at 80. But if you want to buy it here anyway, then I think selling puts and collecting some premium here isn't that crazy. I do wonder, though, again, if this time is a little different from the past couple months and semis are really about to take a beating. Like SMH is about to go down 10%. It's already down 5% today. So 10% would be nothing, to be honest. 20, 25%. Then you're going to get Nebius at 140. You're going to get CoreWeave at 60. Like, you're going to get these names much cheaper than what they are today. And so, I don't know, if you were thinking of buying the dip, I feel like being selective here on the longs is really important. And like, if you have, if you're going to buy 100 shares of Nebius or 100 shares of CoreWeave, maybe buy 25 at a time and kind of see how this plays out. If you have to buy 25 when CoreWeave gets to 90, at least you got 25 at 80. And so your average gets closer to 85. But the question is the sentiment reversed? The earnings doesn't prove to me the sentiment should be reversing. But the momentum is starting to prove via price action that maybe it is. Look at Applied Materials, down 10%. They had a fantastic earnings. As this one's getting hit. Are you still in Iran? Yes, I am in Iran. Average is 43. Stock's at 40. It fell to below 40 last week. It was at 38. Again, are we sending Iran back to $30? Like, I don't know. I feel like a lot of these prices are at least nibbling prices. But I'm saying that with the humility of, hey, if semis are about to take a beating, because they really haven't taken a beating in an aggressive way in the past 2 months. They've had little dips. AMD's still above 500. What are we talking about? This thing was at 200 a few months ago, right? Like AMD could go to 450, and I don't think any long-term AMD investor would be that upset. But given it was pushing 600, it is a pretty big drawdown. So how cheap does cheap become? Zeta right there, 21.29. That's down 2.4. That was almost at 23. As that is now also starting to get hit. Akamai, that had the pump, and that pump has faded. Bitcoin as well. 63 down to 62. Oil, are we actually over 70? Are we? Oil. Yeah, wow. Okay, why are we over 70? Oh boy, breaking news. Iran has stepped up attacks on ships in the Strait of Hormuz. Tehran wants vessels to use its approved route. Oh, that's probably why we saw the wick down on the S&P. More ships are using the U.S.-backed Omani corridor. Reuters is saying Iran's IRGC fired at least 2 missiles at commercial ships transiting the strait on Monday night. 2 more ships were attacked Tuesday morning, which is today. I don't know what to say. I thought we signed A framework for a negotiation. Maybe it wasn't a negotiation, but it was at least a framework for one. I guess it doesn't matter. Is VG up today? VG is up a little bit. I guess it doesn't matter. Dude, I mean, look, everyone has been saying oil is going to go below 70. You were right. The question is, can it stay below 70? And I really would find it hard to believe this thing pumps back up to like 75, 80. Well, 75, yeah, that could happen. But 80, 85 would be a little bit more aggressive. But who knows? Who knows at this point? And if it does happen, obviously oil affects SoFi because the rate cut narrative, wow. This thing was almost 1895 yesterday, 1790 now, as the rate cut narrative hurts SoFi here aggressively. What do you think about Hood's outperformance to SoFi? I mean, it's kind of similar to 2025, right? Hood is, even though Hood took a 50% beating, it massively outperforming SoFi from the lows. SoFi also took, I think, like a 45% beating, 40 to 45% beating, not exactly 50%. Technically 50% from that. Actually, no, yeah. It was like 32 to 14, so yeah, 50%. But, you know, Hood has a lot of catalysts that are exciting for it. I think SoFi has a lot of catalysts, but SoFi is just so tied to the rate cut narrative, whereas Hood is not. I thought Hood would be more tied to Bitcoin, and thankfully it's diverged from that. And, you know, SoFi is not tied as much to Bitcoin. But you got Trump accounts. You have that big event that Hood had last week. We'll talk about that later. I posted a little bit about it on X. I thought from a crypto perspective, a lot of good announcements for Hood. I mean, you just have a lot of product innovation that, you know, the street's probably more excited about. Redwire, that's down 8%. SpaceX now down almost 6% on the day as that's getting hit. So here's the thing. I would imagine Trump is going to comment on these Iran attacks soon and try to figure out what's going on right here. Meta, can we see 614? She's really trying right here. 613 almost. Look at that. S&P going down, Meta's going up. That's starting to really feel like there might be some serious divergence between the hyperscalers and the semis. But I imagine Trump's going to have to say something about Iran and that he's upset and he wants to, you know, either retaliate or something, and that might create potentially some more volatility, or get the markets to realize this is going to be something that Trump has a lot more involvement in right now. S&P down 0.5% on the day. Wolf diluted today. Wolf dilute. I forget the exact amount they diluted by. Someone let me know, but they did dilute today. And so that dilution is what got them at 614. There you go. There she goes. There's Meta. 614. There's the breakout. There is the fact that Meta's doing this, even though the S&P is down 0.5%, is freaking incredible, dude. Look at her go. Look at her go. 614.40. 615 almost. 615. Very close. There it is. There it is. 615. 615.50. Again, the fact that Meta's doing this as the S&P is down, is Google doing the same? Google 371, not exactly the same, but still pretty damn close. Microsoft, if we can get Microsoft here up into the 395s, Microsoft very close to 395. The fact that the hyperscalers are actually going a little green, more than a little green, as the S&P falls, well, what's causing the S&P to fall? Micron, down 7. Dell, down 2. Marvell, down 9. Broadcom, down 3. Cerebras, down 8. You've got all of your semis and your space names taking away that momentum, and it's at least trying to be reallocated into some of the other plays that have been disrespected all year. Amazon right there, 246 as well. It can get over 4, grab very close to getting over 4. I will put out a full post on X today about my experience with Grab for those that are asking. The TLDR, very positive experience. I mean, to me, my initial thesis that it is a pivotal part of Southeast Asia's economy, and this thing does not deserve to be worth at a $10 billion enterprise value for the growth that they're putting up and for the level of significance they have in the region. I think that was reaffirmed just by walking around and seeing how much usage it has. Now, I get it. The margins aren't the best. I get it. It's not an AI stock. I get it. Oil has been up. The shorts are in control. All those narratives are true. I just don't think those are structural narratives that are thesis breakers. If anything, those are like those, you had those same narratives with Palantir and Hood and Tesla for years until those narratives became irrelevant because the company just performed so well. And that's, up to grab to execute. But in terms of my experience with the product, it was just pretty incredible. It's just, it's not an AI name. And because of that, I think the stock has been disrespected all year. SpaceX now, that's down 6. SpaceX has to lose 150 for this thing to get really, really hit. Nvidia has been holding above 192, even with all the other semis getting wrecked right here. SanDisk down 11%. Your boy in the draft has to be last at this point because my entire portfolio is semis based. I am number 4. Chris and Jason are below me. Yeah, I mean, look, my entire portfolio in the draft is rooted in the CapEx trade. So if that thing takes a breather, then my portfolio in that draft is definitely going to take a breather. ServiceNow, incredible strength today, as that is up 2.79%, breaking above 110. Netflix, also great strength, 77. That's up 1.6%. Eli Lilly, 1.16 trillion. I think this is all-time highs on Eli Lilly today with 1235. That's up 3%. The drone stocks getting hit. The tech stocks outside of the hyperscalers getting hit. The semi stocks getting hit. Oscar Healthcare has been on a tear. Oscar, congrats to those that have been in that. Retail called it heavy at $12. Now it's at 30. UNH 425. That's been incredible. It is the semis today that are taking the beating. Did anyone buy the dip on semis yet? Let's go to Fear and Greed. Did anyone buy the dip on semis? Fear and Greed's at 42, which is actually significantly higher than where we were last week or 2 weeks ago at 27. Micron was, I think, at this price right before earnings as well. And so now that the earnings have happened, obviously the fact that it's still at this price means the multiples have compressed, but it was around this 9-10 range right before they had an incredible quarter. I see CoreWeave, I see Iren. TE's getting crushed. Yo, why are these dog ads popping up everywhere? I think Google knows what I watch on TikTok. Like literally every other Instagram reel or TikTok is a freaking dog. I need a dog at this point, dude. I need a dog. Some of these dog accounts, by the way, 7-10 million followers. Like people are milking their dogs, dude. Like it's kind of crazy, but it's good content. Oracle loses 140. Nebius loses 197. Amcor, this was at 69 yesterday. Amcor 63. This was pushing 95 last week. 90 freaking 5. As Micron is $1 away. If you went short this morning, congrats. If you went short, you are making some moolah right here. 902.99 on Micron. Hood as well, down about 3.7%. What do you mean by milking? You guys know what I mean. It's a term of art. It's like they're dragging it. They're like they're getting everything they can get out of it. I don't literally mean milking a dog. I don't even know how you would do that. Okay, is Nvidia, AMD, so AMD down 8%. Nvidia, that means if AMD continues to lose below 500, Nvidia's going below 190. Seems rather inevitable. Meta got the pump to 615.99, then went to 612. So that one got hit. Microsoft 394. The hyperscalers are still green, just not as green as they were before. Enovix, is this up? Enovix is, wow, down 11%. All right, so everything high beta is getting hit. Everything high beta is getting hit. The fact that Palantir is somewhat green is pretty incredible. CoreWeave, are we below 80? That's a little ugly. A little ugly. SMH down 5.6. CoreWeave, it's struggling to go below 80. It's 4. So there it is. There she breaks down. 79.90 on CoreWeave. Why is T1 Energy down so much? Was there news on this? This is this is Leopold stock, but this is a retail. I mean, Twitter definitely hopped on the stock at $9-10 aggressively. So it's a heavy retail trade. I mean, it could just be margin calls getting retail stopped out of it right here or liquidated out of it. But no, there's no headline. It's selling off just like all the other energy names are selling off. Bloom has got to be destroyed right now. Bloom down 9%. Yeah, they're going down with the semis. Bloom, so there's wow, Meta, ugly red candle, just lost VWAP as well. 612 to 609. Let's see if that holds. Okay, again, if the hyperscalers go red, it's going to get ugly today. The fact that they were being held up gave me a little bit of hope. If the hyperscalers actually flip red and the semis are red, the index is going down a lot further than what it is right here. S&P almost down 0.75. We're at 0.65. I saw an interview with the Bloom CEO. Made me super bullish. I still think the valuation on this thing is crazy, but then again, like their fuel cell technology is really the only fuel cell technology that's working and it's proven. Given their partnership with Oracle and they 5x their Brookfield partnership from 5 billion to 25 billion. Like that's just like it's super bullish. It's just, is that enough, to justify the momentum on this, as this was trading at 330 a while back. Walmart, are we up? Walmart is up. Walmart and Verizon are agreeing with everything else. GEV, that's got to be getting hit today. GEV is down 9%. Okay, let's do a poll right here in the chat. The poll will be, have semis topped for the next month? 1 month time frame, have semis topped? That's the question. I think it's really hard to say yes, man. I mean, it's easy to say yes given the price action has been so poor the past 15 days. Micron really struggling to hold above 900. But a month is a long time and sentiment can shift so quickly. I think the other reason, we haven't even talked about this yet, the other reason why sentiment is starting to worsen on the semis is because the arguments from the Ed Zitrons of the world, I'm not going to lie, I don't love all of his arguments, but man, when you hear some of these press releases, a lot of people, it's kind of hard to deny some of the validity behind at least the theoretical nature of his claims. For example, headline last night, Wall Street Journal, Anthropic and OpenAI are handing out tons of free computing power to grab startup share. I read the article last night and basically it said they are handing out as much free tokens as possible to try to get these startups. They interviewed one of the startups in the article to not use open source models, and the startup founder in the interview was like, "Well, the open source models are cheaper, and I'm a startup founder. I don't have billions of dollars, so I kind of need to, preserve capital." And so Anthropic and OpenAI are coming in to subsidize. So that's one reason where people are thinking, okay, this is starting to get to the point where people can't afford this stuff, and even if they could afford it, they might have picked cheaper alternatives, and that's a little scary in terms of the circular financing of that nature. On top of that, you had this news, which I thought was bullish on Friday, but when you really dig deep into it, I can see how people think it's bearish. Nvidia essentially is backstopping every single neocloud. They're partnering with AI clouds to deploy large-scale multi-tenant AI factories, aligning economies through a revenue sharing and credit support model. Essentially, TLDR, Nvidia is going to give the neoclouds money. Those companies are going to take that money, buy Nvidia chips, and then Nvidia is going to get, because they gave them the initial capital, a percentage of the revenue of the GPU licensing costs, or the revenues that the neoclouds were to get. So for example, if Nvidia gave CoreWeave $10 billion, and then CoreWeave bought 10 billion of GPUs, and then CoreWeave made 15 billion off of those GPUs that they bought by setting up a data center, Nvidia maybe gets, 20% of that 15 billion back. So of the net 5 billion in profit from the revenue share model. I think when you kind of dive deeper into what this means for Nvidia's business, it's really bullish, because now instead of selling a GPU once and making $1 once, Nvidia gets to monetize that dollar over and over again in a recurring revenue model, because that dollar now gets licensed out to a neocloud that then gets to use that dollar to A, give it back to Nvidia, but then B, set up their own data center. And I don't know what that means for the neocloud margins, but that means that money eventually comes back to Nvidia after those GPUs go into production. The problem is, once again, people are saying, isn't this just circular financing? Isn't this just Nvidia giving Nebius or CoreWeave, I think Sharon AI was the first company they made a deal with, money so that they can buy their own product, and then for that company to monetize that product, which theoretically makes it not circular. But if Nvidia doesn't give them the money, then the money doesn't exist for those companies to be able to capitalize on that demand. Which, again, you can push back and say the fact that there is that demand is important and proves it's not circular. Because if you have all the demand, you just need the money to finance the supply. Then Nvidia has a lot of cash, then they should be able to do it. But if Nvidia didn't finance it, then would those companies just go out of business? which is why Oracle's down 4%. It's why Nebius is down, why CoreWeave, why Iran, why Keel, why all the neoclouds fundamental business models being questioned, along with the Meta compute deal questioning the compute constraints on the neoclouds. And I think you put that together with the Nvidia backstop partnership that was announced last week, it's just a recipe for disaster in terms of perception of these neoclouds. And that's what I think they're going to get. SanDisk continues to go down 11.8%. I think the Zitron guy is selling fear and clicks. I don't like him. I agree. I think he is. I think he's basically decided in a world in which everyone is bullish, I can get a lot of attention by being bearish. And so again, to your point, I don't think the arguments have a ton of merit behind them when you look at the credibility of how he's constructing them. But the perception of the arguments, which, you know, perception is reality, and that tends to be what the stock market even moves on in the short term when it comes to headlines. And then the actual deals that are happening starts to coincide with the narrative that he's promoting, which is his narrative is there's no demand at all and everything is fake. Again, that I think is going a bit too far. I think the reason Anthropic has a 40 billion annualized run rate is because there is demand. The nuances of open source models versus gross margins, all that stuff is a different question. But the idea that the demand is not there is, I think, a little silly. But nonetheless, you start to have people thinking, wait a second, if OpenAI wants to give 5% of their company to the US government, which was also announced last week, which I didn't like that news at all. And the reason I didn't like that news is because that seems to me like OpenAI is just trying to become too big to fail, which once again bleeds into a bearish narrative, which in the short term is affecting these stock prices. I mean, why else would Sam Altman give 50 billion of his company to the US government other than for his company to become so important that if it were to have a really tough time, whatever administration's in power would have to realize, hey, we can't let this thing fail. And then boom, they would have to save it. And I think that as well is going into this narrative of how much, not only supply, but how much financing power for that supply is actually available. Micron bounced off 900. It fell to 899 for a millisecond, 904. We got to see if this one continues to take a hit right here. For sure, there's some level of financial obfuscation going on here. Yeah, again, like the pushback against circular financing is really simple. If someone gives you the money and you give them back that money, but you buy a product in which you can monetize externally, which is not what was happening in the dot-com bubble. And in the dot-com bubble, the money was literally going back and forth 100 times. In this case, Nvidia gives you the money, you give the money back to Nvidia, but then you monetize the product that you bought from Nvidia, which is the most important product on the planet right now, GPUs. And then if Nvidia takes a piece of that money, that's not necessarily circular in a way that's bad, even though the perception of it feels like it can be bad. And I think that's what Brad Gerstner was trying to say yesterday on CNBC. He was making the case that says, look, all these companies have insane levels of demand, which is why even if you want to believe in the different narratives that are out there in terms of, what constraints exist or how much the demand is growing, the point is the demand continues to sustain itself because of the growth rates of these companies. And those growth rates of these companies are not slowing down, which means you can't necessarily say that this is all circular or that demand is slowing down.
For the vast majority of companies, they want the best. And the best frontier models, the American thoroughbred models, right, are going to be OpenAI and Anthropic and X, with Elon, maybe Gemini in the mix, etc. And so we want the thoroughbreds to run. We want those models to do great. I give huge credit to the White House, Secretary Bessent, Howard Lutnick, etc. When they disabled Fable, we went through a process. We got it back online quickly. We need Americans' models, both open source and closed source, running as fast as we can because the preeminent race is the race with China. We must stay ahead of China for both economic and national security reasons. And I think we found a good balance here. But I don't think it's either or, Andrew. It's both. We need to support American open source models, both the models out of Nvidia, which are terrific. We've got Misha and the team at Reflection that are building some great things, and our closed source models. And I think insofar as Chinese open source models are concerned, we just want to make them play by the same set of rules. We do not want them distilling our models, taking our IP, and then competing against us for free the way that they dumped steel on the United States. Make everybody play by the same.
Ironically, steel, became a commodity. Oil became a commodity. You had multiple global players step in and commoditize the thing that you didn't think could be a commodity, as Micron officially falls below 900. And that's what the Chinese are doing with these frontier models. The difference here is people don't want to pay $8 a gallon at the pump, right? People don't want to pay a gazillion dollars for a million tokens. They want to pay the cheapest cost possible, which reminds me of a commodity. Like, people don't want to pay a lot for it because there should be so much of it because it's not that special. At the end of the day, a token from an LLM, even if Fable 5 seems special right now, in 5 years should be the sort of standard of how people use tokens. Just like internet is, there's a sort of a fixed cost that people pay per month for their internet. Maybe some internet connections are faster than others, but internet theoretically gets treated like a commodity in terms of pricing. And so if that ends up happening for the foundation model companies, it's really bullish for software. It's really bullish for the hyperscalers. It might not be, it's not going to be bullish at all for Anthropic and OpenAI, which might not then be bullish for the semis, because so much of the backlog of the RPO for all these companies, the remaining performance obligations, are Anthropic and OpenAI. Having said that, compute constraints are not going to stop if we use open source models, because you still need to be able to train and do inference and all those things as well. It's just, it might not be monopolized between Anthropic and OpenAI in a duopoly, which is actually really good for the neoclouds. Nebius has talked about this many times, that they want distributed compute. They do not want two companies owning the means to be able to do all the prices, have all the pricing power on APIs on tokens, because if you have thousands of companies doing it, aka making the LLM a commodity, then that benefits all the neoclouds because they get better pricing power on how to deliver that compute. So from that perspective, like, it's really bad for Anthropic and OpenAI. It shouldn't be bad for other layers of the stack, but because Anthropic and OpenAI are so tied, A, to the narrative, and then B, to the financing of AI in general, that's what I think creates the volatility in the trade short term, which is why, you're seeing a Micron get hit 9% right here. So I'm trying to present the bear case and the bull case right here. I think there's a bear case in Zitron's arguments that can be perceived as correct based on the headlines of the deals that have happened. And then there is a super bull case to what is actually happening with these NVIDIA open source models, and how they're perceived as bearish, but they're not actually bearish for the overall industry and what NVIDIA is trying to do by pushing things forward. But in the short term, after these stocks have had such a massive run, I mean, any piece of bearish headline, even if it's not really rooted in reality, which we don't know yet how rooted in reality some of these claims are, they're going to take these stocks down. The interesting thing is, though, the semis, or the software names and the hyperscalers, are not participating in the drawdown today. I mean, the fact that Service freaking Now is up 2.5% today while Micron's down 9%, that goes to show maybe there's a more broadening of the market that's happening, which, again, as much as I hate to say it, it is healthy for the broader rotation. And that just might be something that we all have to deal with over the short term. Microsoft still 394. Nvidia still getting hit. Are we at 192? We are now at 191. As this one continues to go down. Is SoFi a semi now? SoFi is not a semi, but unfortunately, SoFi still gets hit with the rate hikes. Bonner, thank you for the super chat. Hey, Amit, I love the show. Speaking of NVIDIA, its performance this year is interesting. It didn't run with the semis and memory, but it still gets punished as if it had a crazy run. The price action narrative is frustrating. I think for NVIDIA, we've talked about this over and over again, but NVIDIA is a $5 trillion company, and it's just not going to move higher without a massive, massive catalyst. So it doesn't go up when everything goes up. It goes down really bad when everything goes down. But if you bought NVIDIA 3-4 years ago, you've really got the benefit of it. If you just started buying NVIDIA, and a lot of us bought NVIDIA last year, even at 90, 100, 110 bucks, you're still up a decent chunk in the position. It's just comparative to all the other bottlenecks, it's done nothing. But I think it's just too big at this point to, make big moves. This was the first half performance of all asset classes on this chart right here. Bitcoin and gold were the worst performing assets in 2026. Gold was down 7%, Bitcoin was down 31%. And so one would argue, hey, it's time for those things to reverse. But if they reverse, they're going to have to get the capital from somewhere. And the only place where the capital is really in are the semis. Take a look at this chart right here. 59 of the S&P 500 tech stocks are now trading at least 20% below their 252-day highs, a common definition of a bear market. So a structural bear market is a 20% peak to trough decline on the S&P 500. We haven't had that yet. The most we had was 8.9% in March with the Iran stuff. But since we've had that recovery, you've had about 60% of tech stocks that are now trading below their 252-day highs. Now, those highs might be so high that it's not crazy for those names to be trading 20% below those levels, because obviously those levels were just gigantic. But technically, it is bearish in the short term, and it is a definition of what could be characterized as a bear market for those sectors. For other sectors like software that already dealt with their bear market over the past couple months, hopefully that bear market is over. They're getting a little bit more love today. Wow, SanDisk 15% down as that one is getting a hit. How much money's on the sidelines? Money market funds increased by 47 billion last week to 7.95 trillion. So there is plenty of money on the sidelines. Again, I think a lot of what's happening today is not retail or institutional investors waking up and selling their semis. I do think the momentum algos have kicked in. The drawdown is now aggressive, and that just leads to compounded selling. Does that also lead to a lot of sidelined investors coming out and saying, all right, it's time for me to finally get some of this momentum that I missed out on throughout the entire half of the year? This was what Gerstner said yesterday on if he thinks a slowdown could happen for demand in general for AI.
Their information, getting their product IP, and then going out and deploying that. I don't think that's what happened here, but I understand the concern.
Hey, Brad, do you see any end in sight in the growth expectations for AI at this point? There's two camps. One that says, no, this is here, it's for real, and it's going to continue like that. The other is, look, AI is here, but you may not see the earnings continue to grow in some of these other companies around it. Explain which camp you're in and why.
Yeah, well, I mean, listen, the question coming into this year, Becky, and remember, we had two 25% drawdowns in AI data center semiconductor stocks over the last 18 months over this question. Would the AI revenue justify the investment in CapEx, the extraordinary $1.2 trillion annual investment in CapEx that we're seeing? People came into this year very nervous. In fact, on my podcast, my partner and I, Bill Gurley, were on opposite sides of this debate. I thought that the revenues would show up, but we didn't know. In January of this year, we saw Anthropic's revenues with Opus 4.8 beginning to take off, and then they went totally parabolic. That lit the fuse on the market, with the stocks up 80% this year on the back of that revenue growth out of Anthropic. It's the single most important thing in the market. If you told me 3 months from now, all of a sudden Anthropic's revenue or OpenAI's revenue stopped growing, that would be a real problem, not just for them, for the entire AI trade in the market. I don't see that. I don't expect that to continue. We're still very, very early. Let me, in a $125 trillion global economy, if you take 5% of that knowledge work, 5 to 10% of that knowledge work, and you use AI to empower it, make it more productive, that's going to be, hundreds and hundreds of billions of dollars in revenue. If you look at the trajectory that Anthropic is on, I think it could be as high as $100 billion of revenue by the end of the year. There's lots of talk, obviously, about IPOs for both of these companies. And so I think there's extraordinary growth ahead. I think it's terrific for America, by the way. This is the single most important contributor to the GDP growth of the United States of America this year. It's contributing.
That's also the scariest thing, right? Like, this is it. If this shit doesn't work, it's going to hit the fan. But it's kind of rigged to work, right? Kind of has to work. Because again, this is the economy. I think stocks are priced on CapEx. They're not priced on anything else other than CapEx. The software stocks are also priced on CapEx, because if there's fears on CapEx, the software stocks go up. If there's no fears on CapEx, the software stocks historically for the past 5 months have gone down. So it's almost like none of this stuff matters outside of the perception of if the AI trade continues, which is essentially tied to CapEx, and the hyperscalers are spending more money than you could possibly imagine, and they're telling you that they're going to spend even more on CapEx. So these opportunities end up becoming, as Brad said, opportunities for people to get exposure versus thesis breaking moments. It's just, once again, is a stock going from 1,200 to 895 an opportunity for it to go back to 1,200? Or is it a reflection of the market saying, hey, the stock went from 250 to 1,200. It's going down to 895 to consolidate a little bit because, it went from 250 to 1,200. And maybe it needs to take a little break, and it's not the immediate opportunistic advantage to just like go head deep into it of like, oh, wow, stock fell 300 points, even though it's still up 3x year over year, to go buy the dip. Like maybe that's not a dip. Maybe that's a consolidated movement that the stock has to do because it's gone up as much as it's gone up. That's not been the narrative every single time we've had this dip. Every time Micron fell a couple $100, it would go up a couple $100 within a week. Same thing on Nebius. Nebius falls 10, $20. It would be up 10, $20 the next day, sometimes the next hour. I mean, you really couldn't get Nebius below even 250 for the majority of June. And now it's at 196, but it was at 70 in the beginning of the year. So is it crazy for Nebius to chill out in the 190s? Or is this something that's going to go right back up to, to the 250s? Intel, that one's also getting wrecked, 11% down. SanDisk down 35% peak to trough. Wow. Same with Micron, right? How much is Micron down peak to trough? 1250, right? What was the top on Micron so far? 1254 to 895. That is a 28%. Yeah, 30% is 30%. I can make it sound pretty by saying, all right, well, it already went up so much, so it deserves to consolidate. But at the end of the day, none of that is consoling to someone who's down 30% on something from those highs. That's obviously a bit ugly. Amcor that's down 11% as well. Again, when I was in that grab in Singapore and the grab driver said, what do you think I should do with my Micron? I got out of the grab and me and my uncle looked at each other like that was scary. Like it was legit scary. Because you hear these stories of like, oh, you hear the person at the bar talking about some stocks they're buying, and you're like, man, like this is starting to get like everyone knows about this Micron thing, huh? Like this is starting to be, but then you actually experience it. And when you experience it, it's one of those things where like, oh, this is not just like a little story that's part of this fantasy universe of the stock market anymore. This is average, regular human beings that the story is becoming so massive, it is infiltrating their lives, their stream of consciousness, their algorithms, and then they're putting real money behind it, which can be a really good thing because maybe that means those stocks are going to go up and they're going to make a lot of money. But usually when that happens, people have made so much money off those names already that now the alpha that's left to be had is just a little less aggressive to sort of capitalize on. What did you tell him? I mean, we told him the responsible thing that we can't give any advice, and that this was after Micron earnings. So I think I said like Micron had a really good earnings, but a lot of it technically got priced in because the stock was running so much, and even though the forward PE is low based on the nature of how the business has historically traded, there's a reason for the PE being low. But I don't know if he sold it or if he's still holding it. Like I don't know, and maybe it doesn't matter because when Micron goes to 2,000, who cares if it went from 1,200 to 900? But it has to actually make that big of a move. And does it take years for it to make that? Micron's $1 trillion company now. Like we're seeing what's happening with Nvidia as it can't make any moves because it's a $5 trillion company or 4.65 trillion. Do the $1 trillion names actually start to have a little bit of pause in their movements because there's just so much capital to move in market cap that it's not as easy. Oh, that SK Hynix. Okay, so thank you for bringing that up. The SK Hynix IPO is also very weird. They're raising $30 billion via ADRs, American Depository Receipts. So you're not actually buying shares of SK Hynix. You're buying an ADR, it's the same thing like Alibaba. You're buying a receipt for a share. It's functionally the same thing, but technically, if something were to happen, it's not actually your shares. And there's going to be $1 trillion valuation. And Situational Awareness, Leopold's fund, was reported in the SEC filings yesterday as being one of the contributors to potentially buy $7 billion of SK Hynix the day that it goes public in the US. Again, it's already public in South Korea, but it's officially listing in the United States. I think that's bullish for SK Hynix because they're going to get $30 billion flooded into the company that they can then use to do whatever they need to do with it. But is that, once again, a little bit too much excitement for a name that is in a category with other names that are taking a 30% drawdown from the highs? Like, is this the time for people to put in 30 billion into a name like that? Or, would there have been a more opportunistic time? I don't know. We are going to have to see on Friday. I think the IPO will be fine. I mean, you've got tons of institutional investors that will support it. But again, retail. Will retail have the appetite to buy SK Hynix if they're seeing their Micron shares down 50%. Now, I think they will because it's a new toy to play with. You know, maybe Micron and SanDisk are getting boring in SK. But if SK Hynix trades like Micron and SanDisk, then it's the same red down or blue up, or green up, I should say, if they end up moving in a pack together. CoreWeave is now only up 9% year to date, 80.80. At least it bounced off 79.40, so you got that bounce right there. SK Hynix should be IPOing on Friday, if I'm not wrong. Will DRAM buy it? Yes, DRAM already has it. So now you'll have a lot of, wow, DRAM down 9%. You'll have a lot of other ETFs that will be easily able to buy it. What did the grab driver say to when you talked about PE? You didn't say anything. I don't think he cared about the PE here, the financials. He just nodded along and said, okay, understood. But again, then he asked, should I quit my job and start trading full time? And it's like, you know, when everyone thinks they can do that, it's an exciting thing because people should participate in financial markets. But if everyone thinks they can trade trading full time is not easy. Like, it's not easy to trade and make your living by trading. Like, that's not an easy thing to do. But the markets are so, and you know, I've been a victim of this euphoria as well, right? Last year, I didn't think stocks could go down, and I probably should have taken a lot more off the table than I did. Like, everyone, no matter if you're a beginner or advanced, is a victim of that mentality of just like, oh, things are going great. I made the right decision. I bought it. I'm going to be greedy, and it's going to keep going up. But eventually, it kind of bites you in the ass. And when it does, you know, you have to be mentally and emotionally prepared for that as well. S&P 500 right here down about 0.5%. As that's continued to get hit. Netflix should be up with the software names. Netflix right there up about 2% on the day. Netflix has nothing to do with semiconductors. They've already been hit so much year to date, so some of the flows might be going into those names. ARM right there back above 300 as that's down 7% as well. Is there any news on Ondas? There was dilution news last week. I don't see any specific news today, but most of that dilution has taken a beating on the drone stocks. Even AV, which had a great earnings. Look at this thing, down 7%. All the drone stocks, they're moving down today in unison, even after really bullish earnings for many of those drone stocks last week. Mate, you brought the red. I brought the red. I am sorry. It was red last week, though, so I don't know if I can have an impact on this at this point. If this semi-trade is going to chill out a bit, then it's going to chill out. Then again, I'm explaining the bear cases here because I spent some time over the weekend trying to understand them with some of the weekend momentum last week. Having said that, every time people get a little too bearish, 7, 8, 9, 10% down on these names, they bounce back. It has happened literally every time this year. The longest it went was a month in March, and it wasn't even a full month, but that was the entire market because oil went up to 120. Every other small time it happened after that, specifically in the semis, within a few days, many times within less than a day, it rebounded. And would it surprise anyone if Micron went up 9% tomorrow? Like, no, like we've seen those days so many times. It's just now I think people are questioning, hey, like, can I jump into Micron down 25% right here? Or am I going to get my face chopped off if this thing really is trying to get to 750 to bottom at and then form a base, and 909 is just like a little pit stop? And that's where you kind of just have to take a risk, right? In terms of officially what you believe in. Can you talk about the Karp interview? So we talked about it last week, or I talked about it earlier today. Again, I thought it was really bullish. The fact that it went super viral across the entire business media landscape, I thought was super important. And again, Karp is right. The foundation model companies, I don't think really care about customers. They're more interested in selling compute and tokens. But part of this entire AI trade is built on those foundation model companies selling a lot of compute and tokens because they're paying all the hyperscalers the money for compute and tokens and cloud computing. And so it just begs a question of like, how does the trade play out if open source starts to win? The other thing about the Q2 earnings that I think some people are scared about here is that 30% of the EPS growth in Q1 was unrealized gains on Anthropic, OpenAI, and SpaceX valuations for Google, Amazon, Microsoft, and Nvidia. Meta, for some reason, doesn't have a stake in the foundation model companies. I get they're competing with them, but you would think Meta would have invested in them years ago. But so now that those companies have raised a new round of financing, SpaceX going public, Google can't say that, hey, our SpaceX shares increased this much and this is a net boost to EPS, because it already happened, right? The company went public. So if you're going to miss a certain level of EPS boosts that artificially happened last year or last quarter because of the unrealized profits on the private companies, doesn't mean Google's not going to have a good earnings or Amazon's not going to have a good earnings, but are the numbers going to be as massive as the street's expecting? Now, the expectations are $400 for next year on EPS. If you put a 20 times multiple on that, you get to 8,000, right? The question is, are we actually going to get EPS up to 400? And I think 20x is super reasonable for the level of growth that we're seeing on 400. For the level of growth that we're seeing on EPS if we get to $400 a share. And then you could probably put it up to a little bit more than 20 and there's your 8,000. Which is why the earnings are still really important, because if the earnings kind of disappoint and the market is a little afraid of seeing if we get that EPS number, we're probably going to get to $400 of EPS, but if we're not going to get there next year, 8,000 starts to get a little bit into question. Palantir's been around 130, 140 most of the year. Yeah, I mean, Palantir was very close to going below 100. So honestly, that Karp interview I think was really important for Palantir because it reminded the street how special they are. Gil Loria of D.A. Davidson also was, I'll pull up his clip in a second. He was also really enthusiastic about the interview because he said Karp basically proved the argument that Palantir has what he calls main character energy because they're actually delivering the value that these foundation model companies say that they're delivering, which is why he increased his price target to 175 and went from neutral to buy and said, this company just plays a much bigger role. Also, Karp said they're going to freaking 3x the free cash flow to 18 billion by 2028. I mean, I couldn't believe when he said that, because if that's true, you can put some decent multiples on 18 or 15 billion of free cash flow and get to a stock that is well north of $200. Well north of $200. So the 100% growth next year, I think that's reasonable. I think that's actually possible, just given how well they're growing, and it's not that crazy to get to 100. But the free cash flow 2 to 3xing from here, I think is very aggressive. And if that does happen, then that would also be bullish. Trump's in Turkey right now. He already had his bilateral meeting with the Turkish prime minister. We don't have any quotes from Trump. Someone just bought $2 million of Nebius calls. July 17th, 215 is the strike. We also have $4 million of SPY puts that came in. Strike is 728 and 740. Expiring September and then this week. So we do have some bullish option flow coming in and some bearish option flow on the index. Here is what one of the analysts had to say about Samsung's earnings yesterday as Meta starts to lose every level right here, 605. That is very close to losing most of its gains for the day.
I mean, people are worried about the highs. Expectations have been pretty high along the way, but the overall demand for high bandwidth memory, the overall demand for DRAM is still there. We're talking about 18 to 24 month backlog. The supply is huge. You cannot do AI without memory, and especially on the high bandwidth memory and especially on the DRAM, you can't possibly miss this. I mean, the Kospi has been super volatile. If you look at Samsung stock, at one point it was up 165% for year to date. It's been a great run, and the expectations to have an 18x increase, I mean, at 56 billion, this is stellar numbers. I mean, this is one of the best years ever. The profit alone in 2026 exceeds the cumulative profit generated over the past 40 years since Samsung entered the semiconductor market, as one of their executives mentioned. This is huge, and we're going to continue to see this, but it's a question of, do you take the profits at the top out? I mean, do you take the profits out now, or do you wait for a drop? And I think the market has spoken, but it is a good time to jump back in.
So again, it's either you buy the dip here based on the stats that he mentioned, or is what he's saying already common knowledge, and there's nothing to be super excited about when it comes to the memory trade right here. Here's some updates on the options volatility around memory and semis in general.
In the semiconductor category, lean bearish again this morning as the group shaves off 5% and falls to the lowest in almost a month. In the SMH ETF, put trading is double that of calls on 40% higher volume than average, with 6,000 puts purchased versus just 1,500 calls purchased. We're also seeing a fair amount of calls selling, with twice as many SMH calls sold as bought. And that's also something we see in the mighty DRAM ETF as well, which is taking a big 9% hit today, and options volume is on pace for twice the 30-day average. More calls are trading than puts, but 13,500 calls were sold versus just 8,200 bought and about 8,000 puts bought. Micron is down 8.5% and about 25% from its high, still a key trade to watch within that fund. 15 of the top 20 trades across the entire market this morning were in Micron. The good news for bulls possibly is that the biggest trade so far there is a $9.5 million bullish put sale. The bad news is the strike they're selling is the 690 strike and expiring July 17th, which means the person thinks Micron needs a 25% berth to swing to the downside here. It's important to note, though, some context. Flows in semiconductors first flipped bearish in late May when we saw an explosion of put open interest. The sector's now technically down since then, but when SMH was making a brief breakout last month, it was fair to call it the most hated rally since the AI revolution began. So what that means is while a lot of people think valuations could correct significantly from here, the call sellers and put buyers we've seen for the past 40 days or so should give us some balance and hopefully some bounces along the way, guys.
Now, again, it was the most hated rally. Is it still the most hated rally? Well, when everything's at 52-week highs and, there's more euphoric excitement, maybe it's not hated anymore. And maybe that is the exact moment when it stops being a rally, at least in the short term. Again, I think no one, I don't know. I don't think outside of, the Michael Burrys of the world, I don't think anyone's questioning the 3 to 5 year horizon on the broader AI thesis. But I think 3 to 5 weeks, 3 to 5 months, you have a lot more questions than answers because these names have just gone up so much. Nebia's got to bounce off 193 up to 201. So you're seeing some V-shape still down pretty aggressively on the day. Rivian also down 14%. Marvell still down 10%, although you have a bounce from 222 to 225. So maybe that 1040, 25 minutes ago time was our bottom for the day. ARM 297 to 299. It's not a big enough bounce to make you think it's like a definitive bottom right here. What did you guys say on the poll? On the poll, I asked, have semis topped for the next month? 52% say yeah. So, there you go, right? 50% of people say yes. 50% of people say no. That is why we have this volatility. Got plenty of different perspectives here in terms of how this thing fully ends up playing out. Micron, we are 916. Again, here's the other thing about Micron. Like, if it were to get to that 700, 800, 650 level, the forward PE would be so disgustingly low. I think it would get to like 1 or 2 times, which is where it was around that March level, that you just have people that step in and buy and say, you know what, even if I'm buying something that's cyclical, even if there's all these questions, like this is too cheap to be here, which I think was the thesis for a lot of people when they bought it originally. And, they did a good job buying it back in April. I feel like that could happen again. I feel like that could happen right now at 918, at 7 times forward as well. But obviously there needs to be that sentiment to keep it afloat. Nvidia right there, 192.80. Now the hyperscalers go red. So Amazon going red. It's not ironic that the hyperscalers go red and semis get a little bit of a bounce. The flow is rotating right back into the semis as Meta on an ugly downtrend from 615, little bounce off 604, but still at 605. I'm going to do the Dublin joke. So I have the AIPCon interviews from early June put out tomorrow. And I had a 30-minute interview or discussion with Chad. And in that discussion, I did indeed make the Dublin joke. And Chad was as disappointed as many of you have been after hearing the Dublin joke. I also lied and said I thought of it on the spot. I don't think he watched those earlier streams over the past couple of years where I've made that joke I think almost 20 times at this point. But it'll be a fun interview with Chad. You'll get to see his reaction. Zeta, That is down 2%. Lemonade was losing all year, so it makes sense that Lemonade, Netflix, a lot of these names that have been stuck all year. Look at Palantir coming back 135. I think many of those names deserve a little bit of credit now for what they've done. And if the market's taking a break from CoreWeave and Nebius, then maybe some of those names get some love. But if the market takes CoreWeave back up to 100, do those names continue to stay here? What's the Dublin joke? You're gonna have to watch the interview. I can't just do the joke just for the sake of explaining the joke. The joke has to come in a natural moment, like it has every other time I've done it. So if you're new to the stream, if you haven't heard the joke before, you'll hear it eventually. It'll happen. And when it does, everyone who's heard it 50 times will get upset. But for the new people that heard it, by the way, it's not even my joke. It's a lyric from a Drake song that it was like a good bar. And I was like, oh, this could be like a punchline for a joke. And I turned it. It's not even original. That's how bad it is. But it hits. It hits every freaking time. It hits every time. Wong. Shout out to Mr. Wong. Wong was there. Wong has been watching the channel for like 4 years now. It was so cool to see him in person. And so Wong, thank you for showing up to the meetup. We got to hang out with Wong the day after the meetup as well. So it was a good time. We went to this Harry Potter exhibit in Singapore, in Sentosa Island. And then when we came back, we watched Goblet of Fire. And I don't think I've seen any Harry Potter movie outside of 1 and 2, and that was like a decade ago. So I kind of want to watch the 6th one and the Deathly Hallows Part 1 and 2. Like Goblet of Fire was pretty good. I'm kind of interested in Harry Potter now, even though I've never read the books. So I think my next content binge will be the last Harry Potter movies. Okay, what else do we got? Inflation expectations. Do we get that from the Fed? We don't have CPI or PPI this week. I'm pretty sure that's next week. Oh yeah, NY Fed. Okay. These expectations are bearish. 3.7 versus 3.5 is what we're looking at right here.
It's some breaking news out of the New York Fed. Steve Leisman has that for us. Hi, Steve.
Hey, Leslie. Yeah, the New York Fed out with its survey of consumer expectations for June with the closely watched inflation expectations in it, and they are up for the short and medium term, with a question about whether or not with the decline in gas prices, they fall in the months ahead. But for now, New York Fed reporting that they're 3.7% for the 1 year outlook. That's up to 0.2 percentage points. The 3 year up as well, 0.2. By the way, that 1 year is the highest September 2023. The 5 year unchanged at 3%. Pardon me, but that's been hovering around that 3% for quite a long time. The Fed looking more closely at the 3 and the 5 year numbers. Price expectations for medical care rising by 0.5 point. Expectations for rent up nearly a full percentage point at 0.9%. And for food prices, they actually fell 0.8 percentage points, but they're still high at a 5% year over year outlook. The outlook for the job market, though, did improve. Take a look here. Labor market expectations are higher for the expectations for higher unemployment declined by 1.5 percentage point. That remains above the 12-month average, but the average probability of losing one job, that declined by a full percentage point. That's below the 12-month average. And the probability of finding a new job if you lose your existing job, that also rose 1.2. So better, more stable numbers from the job market. And just one other point here, the New York Fed expectations for U.S. stock market hitting the highest level since April 2021, up 2.9 points. So they are paying attention out there in the broader world there of what's going on in the stock market here. But overall, Leslie,
This is also the argument by Mike Wilson and Tom Lee around the Fed. So again, Kevin Warsh, as we're trying to get a little bit of a bounce here, folks, like the smallest of bounces on the semis, but they're still pretty beat up. The argument from some of the sell side guys are like, hey, Kevin Warsh is not giving the Fed or not giving the markets guidance on how the Fed is going to react. So you've got to be ready to let the markets do what the markets are going to do, which is test the Fed. And that testing of the Fed, it's going to result in the markets trying to figure out what interest rates should be, not what the Fed thinks it's going to be. And that might also create a lot more volatility.
And this is, I think, what we got to get used to is that with the new chair probably not giving as much guidance, he's going to allow the market to kind of figure it out on its own and have these different views. We're in that adjustment period now. And I think that's one of the reasons why the market's been a little choppy or even correcting in the last month or so, is we're getting used to this new regime, which is going to be higher volatility and potentially the bond market. But over time, I think what's going to end up happening is the market's going to settle down. It's actually more estimates, a wider dispersion of estimates actually leads to lower volatility in the pricing over time, but we're in that adjustment period. So we think rates are lower ultimately, particularly at the back end. And oh, by the way, we've talked about this on the show many times. New Treasury Secretary, new Fed chair, this kind of new Fed Treasury accord to really anchor the back end. That's what they're focused on. You got to get the back end down, or at least anchored, because you have so much debt that you have to basically finance.
Do you think?
And by the way, financing that debt has not become easy. This 10-year, dude, like a lot of the bearish economists that I read, their argument is this 10-year is absolutely unsustainable over 4%. And to be honest, in 2025, Trump kind of hinted at that. He wanted the 10-year well below 4%. That has not happened. We got to 3.8% for like a day, and then it bounced right back up. The lowest we got to was 4.2 a couple weeks ago. But we're back at 4.5. And the bond market freaked out back in April of 2025 when we were pushing 4.8. We were pushing 4.7 back in April of 2026. So like we have to finance the economy. We have a very high interest rate to pay to finance the economy. Rates aren't coming down. Kevin Warsh did not signal even in the slightest that he's willing to bring rates down. He's willing to not hike. At least he said that. The other guys are willing to hike, which, that's when oil was 90, oil 70. Hopefully they change their mind, but they're not willing to cut yet. As Micron gets to 925, bouncing off 891. And, that is also, I think, making people wonder, hey, when does this officially come to fruition in terms of a meaningful rate cut? Other than that, it's been the same narrative that we've had all year, just with momentum factors taking a break. Microsoft right there, 392. Microsoft 350 to 390, still a big move. I know it was at 470, trapped a bunch of people a couple weeks ago, but seems like that's coming back. AMD, that's down 7. Grab trying to get back to 4. And then Google losing the entire pump today as well. Wow. 373 all the way down to 367. Cyclical numbers are extremely fast. It looks cheap now, but it can look expensive in a quarter or two. Yeah, I mean, the argument is not that a lot of these semis aren't cyclical. It's like, how long is the cycle going to last? And then the pushback to that is like, even if the cycle is going to last for a long time, that growth's already being priced in. That's fair. It's just, what if the cycle lasts even longer than what people think is a long time? Which, again, if you're bullish on AI, you kind of have to believe that. Like, maybe there's a world in which the AI bull case can turn into, it's not about CapEx, it's about like AI productivity helping software companies and just consumer discretionaries and financials and all this stuff. But all that productivity has to come from the hardware, which is why the hardware names, the ARMs, the Dells, the HPs, et cetera, they've gone to the moon, because you don't get that productivity. You don't get that intelligence, that token generation without the wafers and the chips and the memory and all that stuff. So I feel like it's kind of hard to decouple the AI productivity narrative to be bullish for overall GDP growth when half of that GDP growth is coming from the hardware names. And that means if you're long AI, you have to be long the cycle of spend on CapEx. Because if you're not, I don't know if you get the productivity benefits unless somehow we can train models without needing to spend hundreds of billions of dollars on GPUs. Which, I mean, maybe in the future there might be some innovations there, but until then, it's a lot of spending and a lot of data center buildouts, which is why GE Vernova has gone up the way it's gone up, building the turbines for those data centers. Reddit right there, 203 that's up 1.4% as well. I think this was another bad call from the Fed chair for Trump. I think it's too early for Trump to get upset at Kevin Warsh. I think eventually, if we get a year and we don't have rate cuts, he will be upset. But even on an interview, I think it was like a few days ago, he said Kevin's going to do what he's going to do. Hopefully he does a good job. But you don't have him being aggressive. You don't have him making nicknames like Too Late Pal yet. I think that's going to take a while before he gets there. Here's some coverage on the Trump Turkey news. Also, by the way, Reuters is reporting IRGC attacked a third ship in Hormuz. IRGC attacked a third commercial ship in the Strait of Hormuz. A U.S. official told me. Okay, so Axios is citing a U.S. official. And that is probably why oil spiked up above 70 as well.
Right.
Hey, Jonathan, well, as the president touches down in Turkey, he's greeted by the Turkish president. Of course, what is going on in terms of the conflict in Iran will be top of the agenda, especially given the fact that, as you've mentioned, we had this strike on a Qatari LNG ship. And this is really important for a number of reasons. One, it shows that the ceasefire right now is quite fragile. Second, it shows that even if you are a mediator like Qatar, like Doha, and you are trying to forge ahead with the MOU during these peace talks, to get to a more sustainable peace, that you potentially are not safe, even though you are playing this role as a mediator. And finally, Jonathan, I think this is something that the United States is going to make sure that they highlight, is that when it comes to this vessel that was attacked, it was carrying liquefied natural gas. Of course, we've seen Europe have to rely on a partner like Qatar when it comes to LNG after Russia's invasion of Ukraine. So you have the European economy very vulnerable to vessels like this making its way to the Strait of Hormuz, but to this White House have been unwilling or unable to provide help when it comes to reopening the Strait of Hormuz.
Anne-Marie, it's not a one-off. We've seen a series of things like this in the last several weeks. What's in it for Iran to do this right now on the eve of this NATO summit?
Well, I think two things. I mean, Iran, firstly, is getting what they want out of this MOU. They even had the Treasury Department give waivers, lift some of these OFAC sanctions, so they are able to sell on the open market at market pricing their product. Secondly, at the same time, they can keep everyone on edge about what is going on. They could potentially keep a little bit of geopolitical premium into the energy market, which many analysts are saying is going to, after this crisis, move to a glut, and also keep insurance rates very high. So for Iran, this is really a win-win situation when the IRGC goes after ships here and there. The ceasefire remains, it still remains incredibly fragile, but there's still this geopolitical risk premium in the market. And for the regime, that is actually quite helpful, even though it is incredibly destructive for the global economy.
So as she points out, it is a bit more advantageous for Iran to obviously have that MOU go in their favor, even if they haven't fully opened up the Strait of Hormuz. And again, there's a lot of questions on what that MOU officially implicates. Do people have to pay tolls? Is Iran, Iran's reportedly getting upset that more ships are going through the U.S. Oman route through the Strait of Hormuz. Does Iran force them to go through a different route? How many different LNGs and vessels are they going to attack in order to enforce those rules? Like, these are all still really big questions that the framework of a negotiation that we signed last week didn't really answer. And I don't know if Trump really has the answer to that either. Here was him 30 minutes ago speaking about Iran at the bilateral meeting.
Iran, where we have essentially decimated their military. They cannot have a nuclear weapon. And we have some very good discussions, but we do a lot of trade with Turkey. We make great things and they make great things, and we've had it's had a very big impact on both of them.
So again, Trump's argument is we've decimated their military, which I think people, they've heard him say it a million times, but the question is, does that actually give the United States more negotiating power to be able to get what we want out of the entire situation? Wow, Micron. Goodness, 927 down to 914, almost within a minute of hitting that 927 level. So you got the bounce off 892. If Micron just short-term topped at that level, then that means everything probably did in the semi-trade. Nebius. Yeah, look at that. Doesn't that chart look exactly like Micron's? Nebius got to 203.78 at 11.13. Micron got to 927.85 at 11.13. And then they both start to take stair steps down. Nebius now back below 200. If we look at the heat map for SPY, as you can see, the semis are red, but it's not really the biggest part of the heat map. You've got a lot of other sectors that are getting some of the rotation, including the hyperscalers to an extent, but consumer defensives, energy, utilities, real estate, healthcare, sectors that have not really, outside of energy, had the best year, are having those funds kind of just rotate. Now the algos are going nuts right here. Who picked Micron in the draft? So I have SanDisk, and Matt Money has Micron. I'm surprised I'm only fourth, dude. I thought I think my portfolio is the most high beta out of everybody. I feel like I should be last. Reddit, Apple, and Google are saving me a little bit, but everything else, Galaxy, it's a NeoCloud. All the NeoClouds getting hit. Nvidia, the fact that Nvidia is down 8% is hilarious. Bloom, I expected. Rocket Lab, I thought it could go back to 80. I don't think it would happen this quick, but if the CEO is selling shares, then that probably could happen. I think Matt's number one. That's SpaceX short being one of the biggest winners here. Counter back at 135. Buck at 135. So I guess as we head into July, you've got IRGC issues. You've got memory concerns. JP Morgan put out a note about memory today as well, and they weren't bearish, but they weren't really bullish. I'll link that report if anyone wants to read it. I was reading it this morning, but their argument was like, hey, this is now more nuanced because we're approaching a part of the cycle where we have to really ask ourselves how supply Sanjay Malhotra is saying that we don't have any visibility until when supply comes online. But then he's also telling us we have multi-decade visibility into robotics memory demand. It's like, okay, you might have decades of demand, but if that pricing power for those decades are not at 95% margins, then it doesn't really matter in terms of getting the multiple that they're getting. So you've just got a lot more people trying to ask how serious should we be taking this 30% drawdown. And then you had Morgan Stanley come out on Meta. Here's what they said. Meta's compute business would be highly additive to Meta's current AI product efforts. However, we'd much prefer that Meta develop core AI products, leverage them over its base of 4 billion users, and require massive compute for its own inference rather than selling access to infrastructure. What this means for forward CapEx is unclear. We expect Meta to remain committed to developing a frontier model and launching improved versions beyond Muse Sparks, while also pursuing a range of AI-driven products. We currently project Meta 2026 CapEx or 2027 CapEx of $202 billion. That would be $50 billion above what Meta did in 2026. If that's happening, how is that bearish for the NeoClouds? How's that bearish for the semis? How's that bearish for the AI trade? I mean, you really need one of these hyperscalers to pull back CapEx in an aggressive way. And if they don't, I feel like this trade has a lot of legs behind it, even, within all the dips that we have to deal with, because the money's going to get spent. The money's going to go somewhere. It's just, the multiple that some of these stocks get might not be as appropriate, given they've run up hundreds of percent for the year. T1 Energy, that stock's still down 15. Warsh is definitely not going to hike. That's mainstream media fear mongering. I agree. I also think oil being down is enough for the other Fed participants to change their mind. But I don't know if he's going to cut. My gut tells me we get one cut this year. I don't know if we get two cuts. My gut tells me we get at least one cut. Now, we talked about this before I left, that there is an argument being floated around memory inflation, and that memory prices are getting so high that, I saw this at the Apple store the other day. If you want to add a certain amount of memory to laptops, it's like $300, $400, $500 above what it used to be a few years ago, where it would only be like $50 to $150. And that's obviously because of the pricing surge. Tim Cook obviously came out and said that memory is forcing them to raise prices. So could there be structural inflation that really gets permeated throughout PCE, CPI, and PPI because of memory? I'm hesitant to believe that. There's going to be some inflation, but is it going to be enough to the point where we have to hike? I really don't think so. But is it enough for us to not cut as well? Yeah. There's a world where we don't cut because the electronics producers are just raising prices astronomically. And maybe that's not the most bearish for inflation, but it's definitely not the most bullish either. which then begs the question, what happens to growth stocks if we don't get a cut? Now, again, none of these stocks really need a cut. Micron is going to get all the capex they're supposed to get from the hyperscalers with, if rates were 10% or if rates were 2%. If rates went to 10%, I still think Meta would spend as much money and Google's, but maybe that would make them change their minds. But like high rates or low rates, Google's spending capex and they're going to have to spend a lot of it on memory, a lot of it on Nvidia, a lot of it on AMD. It's just the sentiment around the multiple you put on these stocks. Is Micron now 910 right here, down from 930, is what goes into question. China's DeepSeek is developing their own AI chip for Reuters. Yeah, we saw that in the morning. Again, I don't know how that's bearish for Nvidia, because it's like Nvidia is not selling to DeepSeek at a significant level for the street to care about it, from my understanding. But we talked about this before I left as well. Anthropic signed that partnership with Micron to secure supply of memory because it's pretty freaking obvious Anthropic wants to make their own chips. OpenAI signed 2 partnerships over the past month, one with Cerebras, one with Broadcom. It's called Jalapeno is the name of the chip, to build their own inference and chips for inference. So from that perspective, it's like, okay, then that means that these other companies like DeepSeek are probably going to also build their own inference line on Nvidia, which again, the perception here is that, okay, people want to stop paying Nvidia, which means their gross margins have peaked, which I think has not happened, but that is perception. I mean, what happens if Nvidia comes out with like 80% gross margins next year? They're probably not going to, but like if it's still at that 75% level and growth is going to be north of triple digits, which is what Jensen guided for. Oh my goodness, are they still going to keep it down? At these levels. Why did they name it jalapeno? I have no idea. I have absolutely no idea. All right, let's buy something today. What are we buying? What are we buying? Let's make a purchase. Nice little red day, almost 1% down on the S&P. I think we are going to buy a nice 100 shares of a company that I've been waiting to see a dip for the past 3 weeks now. I actually missed the dip initially at 95, then it ran up to 115. We are going to buy some CoreWeave. 82.20 CoreWeave. We are in 82.20 on Mr. Core. Actually, 82.17 we got. 82.17. All right, we are in. There you go. This is in my trading account, not my Robinhood account. You can see it right there. Tasty trade. 82.17. I think the neoclouds are going to be okay. I think this is a short-term boost of adrenaline that is being put into the system from the hyperscalers that is questioning, aka Meta Compute, questioning the neocloud thesis. Don't think the neoclouds are dead. Having said that, I also like CoreWeave because, again, it's only up 9% year to date. Sorry, it's up 3%. Wow. This thing is complete. Now, the one thing I hate about CoreWeave is that the insiders are selling like crazy. They deserve to. They've built a successful company. They deserve to take profits, but it is a little aggressive at CoreWeave. I'm not gonna lie. Also, the other reason Nebius is down is because the CIO sold like 50,000 shares or something. I think it was planned though, so I don't think you can read too much into it. But it was the CIO. Correct me if I'm right. Is the CIO or the CRO? Someone in the C-suite sold like 50,000 shares, and that also I think probably added to some sentiment on the downside. But I mean, CoreWeave's up 3% this year, and they have $100 billion in backlog. Like if everyone loved Nebius at 300, CoreWeave already felt like a discount at 100 compared to Nebius at 300 when you look at their financials. I know Nebius is probably the higher quality company when it comes to their sort of diversified full stack, and CoreWeave has a lot of debt. I get it. But Nebius is still, how much is Nebius up year to date? Nebius is up year to date 122%. CoreWeave's up freaking what? 3. So maybe there's a difference there. Now, if the entire AI trade is balloony, then I think the business models around the neoclouds get hit pretty hard. I just think the announcements on Meta and Nvidia backstopping some of the neoclouds and then Meta selling compute, it's like sentiment that seems bearish for neoclouds, but it's not actually bearish. And that's where I do think there's opportunities in this market to take advantage of. I don't think memory is memory is probably an opportunity here. It's just I can't come to grips with buying the damn thing because it's up so much and I feel like I missed the trade. And sometimes, when you mentally move on from a trade, you move on from it. It's like, okay, I missed memory. It is what it is. Like, you can't get every trade. I missed it. And I'm like, at what price do these memory stocks need to come down to for me to feel like, oh, wow, this is like a blessing to have this opportunity? Is it really 900? Is it actually? Or is it more like 750? Because I don't know if it's really 900. That doesn't mean it has to go to 750, but I don't know if 900 is like the holy crap. You get the opportunity of a lifetime to buy memory names here. I don't know. Yeah, you don't have to swing at every pitch. That's correct. That is correct. The worst thing about the memory sell-off here is Micron, incredible earnings, down 30%. Samsung, incredible earnings, down 10%. It's very similar to Palantir, which, starting to get a little bit of recovery, but still has been stuck all year. Really good earnings for the past 4 quarters, and it's not been able to make a pump. Like the sort of gut signal that tells me is it's priced in. The market believes Palantir should be putting up these numbers, and the market's not willing to pay that much more for it because they expect that out of them. And so with memory, it's like, yeah, you expect Micron, if they're going to have a $1.2 trillion market cap, or Samsung to be $1 trillion, to have these massive operating profits that are greater than the biggest company in the world, like Nvidia. And essentially, does that fully become priced in? Structurally, one looks at the PE and says there's no way in hell that could be priced in. But then perceptually, based on the price, one could say, well, it's up a lot this year. And maybe it is. Yeah, Nvidia as well. That is correct. Nvidia is expected to grow like crazy. I mean, Nvidia is holding the weight of not only the American economy, but the global economy on its shoulders. They better be growing at levels that are astronomical. And the 4 PE is stupid for the growth, but they're doing what they have to do. And I think we should all just be happy they've not utterly collapsed, because if they didn't, I couldn't imagine where Nvidia would be getting hit. But whether it's Micron today, whether it's CoreWeave, whether it's Nebius, whatever semi dip that you buy. Again, I think today you guys saw me right now. I bought the dip on one of the semi names, CoreWeave, not literally a semi, but definitely in that semi ecosystem. I think today is the day to nibble. I will say that. I think today is the day to nibble. If you have some cash, I think today, pick your favorite one, because they're all going to go up and down together, to be honest. Like Corning, if CoreWeave gets back to 100, CoreWeave's probably back at 200. If Caterpillar gets back up to 970, I would imagine your Nebius is closer to 220. Like, all these names move in unison outside of Nvidia. So whatever nibbling you do today, I do think there's room for all of them to go up or down together. Now, if they all go down, then they all go down together. SpaceX has really been holding 150 with that NASDAQ inclusion news, has not dropped below. Oracle's got a different issue, dude. Oracle told everybody on the earnings call that they're going to dilute by $40 billion. That's the other reason I forgot to mention today that I think Oracle is down. Because their numbers out of all the neoclouds are honestly better because they have the most revenue backlog. But a lot of that backlog, 50% of it is OpenAI. And if OpenAI is, not that hot right now, then Oracle might take a hit. But number two is they told you that they're going to dilute aggressively. $40 billion worth of, so it's like I think everyone's like, okay, let them do it first and then we'll buy it. And that might also, mean we have to take a breather. Iran, I think Iran, I said this in the morning, I think Iran is getting too much hate. I get the Golden State Warriors thing was cringe, and I get that the co-CEOs getting $1 billion worth of stock for essentially having to do nothing is also cringe. But I kind of think the timing of those two announcements is happening because they're finally getting ready to announce a big deal. That is my thought on how Iran might end up playing out. Fear and Greed's at 41. So I get it. Stock probably deserves to get hit on those announcements, but I also think it's gearing up for a deal. Now, granted, we've been saying that for a year, and we haven't got it, so they're going to have to actually show that they can get a deal. Here's what Gil Loria said about Palantir yesterday as well.
Palantir's main character energy, that's what you called it in the note. Tech is sort of back, right? I know we've had some ups and downs when it came to tech this year. Does it continue to be a winner, or does it really need tech to participate? And do you expect volatility for Palantir and or tech for the remainder of this year?
We expect a lot more volatility for no other reason, because every data point about AI causes people to rethink the length of the cycle, how much more data centers we're going to build. Are we going to need that many semis? Are we going to need that much memory? So there's going to be a tremendous amount of volatility. And unfortunately for Palantir, they get caught in that because they're in the indices. They're a pretty big component of the NASDAQ. They're a pretty big component of the software index. And so they get a lot of volatility in their share because of those movements. But realistically speaking, Palantir, to your point, has main character energy, as in their customers love them. They're winning. They're helping their customers win. And that feeds on itself, and it allows them, they don't really need to go out with a lot of outbound sales motion. They get inbound calls, and then they can take those inbound calls and be selective about which customers to take on and help them. So winning begets winning, and that's what's happening with Palantir right now.
Yeah. And
here's the Amazon news as well, as they're getting ready to raise $25 billion here.
Ludlow. Robert, on this deal, every day, not every day, I'm exaggerating, it feels like we have some hyperscaler coming to this bond market and tapping it. And for the most part, maybe we put aside SpaceX, the market absorbs it. How far can these companies take it? How far can they increase their leverage before we start looking at things like credit downgrades?
I think you better get used to having me on set, because we're going to see a lot more of
Which
this.
is a treat, by
You
the
could
way.
just ask, Robert.
We have said this over and over again. The biggest hyperscalers I would consider to be on the Mount Rushmore of credit. These are AA and AAA names that have hundreds and hundreds of billions of capacity. Somebody asked me this morning, what would it take to have one of these names go to junk? You're talking a number that would be, I think, over $1 trillion. Wow. So I just think that what we're seeing here, supply continues to fall well behind demand. Spending is going up. And the only way to spend is to borrow more money.
Which is, again, part of the reason I think all of these are dip buys, because Amazon's going to spend the money. And if they spend the money, it's going to go into the semi names.
Reportedly developing its own AI chip. Kate Rooney is gracing us with her presence after having been back at home base.
Yes, it's great to be here. Great to see you, Carl and Leslie. So when we talk about DeepSeek, quick reminder here, this is this ultra low cost Chinese AI disruptor. It competes with OpenAI and Anthropic. And according to Reuters, it is now trying to compete in the custom semiconductor arena. So DeepSeek is reportedly spinning up its own chip, and that move would reduce its reliance on partners like Nvidia and China's Huawei. AI hardware does tend to be one of the biggest cost centers. When you talk about the AI labs, it's sort of part of that whole compute discussion. You got data centers and chips, and having your own chip, it's often a budgeting tactic on one hand, but it does also signal bigger ambitions for this Chinese disruptor. So DeepSeek is going beyond just building these AI models on other people's hardware. It would own more of the so-called tech stack if it goes ahead with these chips. So DeepSeek is already among the cheapest. When you look at the leading AI models, at least, it is a fraction of the cost of Anthropic's Fable, which is most expensive. And a more ambitious and likely more cost-efficient version of DeepSeek is not great news for OpenAI or Anthropic, which are both slated to go public. They are already under immense pressure from cheaper open-source versions of this tech. CEOs we talked to starting to push back on what really was a spend-at-all-cost attitude in AI. That's starting to shift. And OpenAI has already started to go in this direction with its own custom hardware. It did recently unveil a custom inference chip with Broadcom.
Which, once again, that's why NVIDIA's down. Does NVIDIA deserve to be down? Probably not. But if everyone's making chips, the market starts to think NVIDIA's gross margins potentially will come under pressure. There's no evidence that that's happening. There's only evidence of new partnerships on chips, no evidence of the actual numbers for NVIDIA going the opposite direction. But I think that's why, the stock is probably down today. Paul, thanks for the super chat. Do you think South Korean leverage unwind could kill us regardless of sustained earnings growth and surprise? Yeah, again, South Korea is a bet on memory. Samsung and SK Hynix. I think SK Hynix raising the money they're raising today is really important because, or not today, on Friday, because they're going to have more money to do what they need to do. But it also adds more leverage from U.S. investors who are going to be able to buy SK Hynix on their Robinhood accounts. That could create more volatility. But South Korea has not done anything special outside of hosting two companies that are responsible for being one of four companies, or two of four companies, that have the most important commodity on the planet, which is memory chips right now. You know, it's not like there's been some massive revolution in South Korea that has unleashed all this technology and entrepreneurship. It's like, no, it's just like these two legacy companies just got put at the right place at the right time, literally the right time, because if you had an oversupply of memory, it would not be the right time. And the entire stock market in South Korea, Kospi, got propped up on that with a ton of leverage. Now, because the memory trade is so important and likely continues because we need so much more memory, the show should go on. If that trade unwinds, the entire economy, or I should say the entire stock market in South Korea unwinds. It's not like the semis can go down in the United States and, you know, consumer discretionary and software can rebound. I mean, those probably get hit if semis really go down 30, 40, 50%. But to be honest, because American markets are so dynamic, you might have a lot of people that say, okay, I'm going to sell my Broadcom and I'm going to go buy ServiceNow. And ServiceNow is still an amazing company and the money just rotates. Whereas in South Korea, there's not much to rotate to. Because the reason the index is up this year, the Kospi, is because of memory. So yes, the unwind is very scary. You know, we talked about all those articles of people foregoing their life insurance packages to open up brokerage accounts and get margin loans. But it's also like, this is kind of what happens when something becomes as aggressive as the memory trade. And I think the numbers justify the trade to continue, but the sentiment at this point, as Micron continues to get hit right here, 905, is going to have to figure out how much this trade wants to go higher or lower from here. Oh, Taiwan as well. Yeah, thank you for bringing that up. So Bloomberg did an article about Taiwanese and Japanese margin loans, and it is also getting pretty aggressive. So Taiwanese margin, so people in Taiwan taking out margin loans, has basically reached an all-time high. It's at now 40%. And so you've got a decent, you've got Kospi that's like at 300% over levered. You've got the United States that's at, I think, 1.9 trillion. Taiwan also overtook India's stock market, thanks in part to TSMC, 4.95 trillion versus 4.92. And then you got 40% of this being rooted in margin, as more and more people in Taiwan, which they don't have to just buy TSMC or Taiwanese stocks, they can buy American stocks. But the point is they're taking out margin and they're leveraging up. Same thing in China as margin loans hit 395 billion as of last month. And all of that's going into tech. And now it's happening in Japan. Now, granted, the yen carry trade, we need that to not be an issue. Where are we at on JPY? We're at 161. This gets ugly if we get to 165. So it's been held down, at least for now. So I don't think people have to worry about a yen carry trade, even if the Japanese have raised rates. But everyone's levered up. Everyone is levered up. And it's not just individual retail investors. It is the biggest technology companies on the planet. They are also levered up. Now, they will be able to pay back their debts with no issue, whereas a retail investor that gets smoked won't be able to pay back the margin loan. But the point is, this bull market is fundamentally at this point starting to get built on leverage, which is okay as long as it continues to be a bull market. And these dips in the middle that wipe off some of the leverage, that's fine. That happens. It's just you don't want these dips to become 30, 40% declines, because then the leverage completely wipes out most people in the markets. The 3X ETFs need to stop. Yeah, the South Korean regulators have started to put more scrutiny on the ETF providers, specifically 3X, Samsung, 3X, SK Hynix. I don't think it's going to stop. We almost had 5X ETFs back in 2025. In December 2024, there was a company, I think it was ProShares, they filed for 5X levered ETFs. It almost got approved. The SEC, a month before it got approved in the United States, said, yeah, we probably shouldn't do this. But it's people, you can't stop people when they're ready to lever up and when they think that there's an opportunity here to make a lot more money. Again, it's just, Robinhood took its 50% drawdown this year from 120 to 68, and it's made a nice recovery. I don't think the semis have to fall 50% or anything, but if they fall 10, 15, 20%, and they're at least Robinhood, Robinhood's barely breaking even year to date. There's a lot of these semi names, they'll go down 20%, they'll still be up 80% on the year. It's one of those things where I don't think the markets are going to be that upset if those names consolidate at those levels. Cerebrus just getting wrecked right here, 174, as that is also down 9.2%. Amit, is this your first day back? Thank you for the red market. You are welcome, Sammy. You are welcome. You can't win, dude. If I leave, it's red. If I come back, it's red. Again, July is supposed to be good for tech stocks. It's just for momentum. July is really ugly. Rocket Lab now down 10%. And we experienced it last year. Last year, July was not fun. August and September actually ended up being way better than July last year because June was crazy. We had such a good month. Now, this year, we didn't have a great month in June, but we definitely didn't have a horrible month. June ended out the best Q2 we've had since 2020. So, you know, you definitely had enough excitement there where I don't think if July takes a break, people would be that upset. Here's some coverage as well on the semi names going down.
To a record, its quarterly profit now exceeds Nvidia and Apple. And yet the stock still fell. Look at that, 7%. At one point, it was actually down about close to 10%. So what happened? The first part is expectations. The stock is up, roughly 380% in just a year at those levels. Beating Wall Street just isn't enough. You have to actually beat the whisper numbers, which are the unofficial targets buy-side investors are actually trading on. Samsung came in roughly about 6% ahead of the street, and that just wasn't enough to satisfy. It didn't help that divisional results for each business segment won't actually be broken out until July 30th for Samsung. The selling, though, is spreading fast. SK Hynix, competitor, down about 6%. The Kospi in South Korea fell about 5%, which was enough to trip a circuit breaker. And then, of course, it hit U.S. names. Micron, down around, 6% right now. SanDisk, off. It was off about 10. Now it's down 9.5. Morgan Stanley, in a note just now, calling it memory exhaustion. There's one more thing to watch, though, for this week. SK Hynix lists its $28 billion ADR, American Deposit receipts, in the U.S. on Friday at the NASDAQ. And some of the selling could be investors freeing up cash to buy into that deal. But a raise that big also feeds the long-term worry just about overcapacity. If all of this money's coming in, they eventually have to build. What does that mean for supply? The three memory names, though, aren't interchangeable, though. Samsung is the biggest and most diversified. You got fabs and smartphones memory. SK Hynix leads in high bandwidth memory and is the main supplier to Nvidia. So you could almost say it's the purest AI memory play. And then you got Micron, the big US name, which is focused on locking in long-term supply deals to avoid the old boom and bust cycle. They just announced one with Ford yesterday. The fundamentals across the industry, though, still look solid. Counterpoint Research just yesterday sees DRAM prices, that's dynamic memory prices, climbing roughly 10 to 20% this quarter alone, above its earlier forecasts. And you're constantly seeing these numbers keep climbing higher. So the sell-off wasn't necessarily about the quarter because the Samsung numbers were strong. The stock just got there first, guys.
Again, as Morgan Stanley said, memory exhaustion. I think it's AI exhaustion, semiconductor exhaustion. I think it's a nibble on the dip. I think pick your favorite semi name that's reasonably valued, even though many of them, again, a little aggressive on the valuation. But a CoreWeave, I think, is way more reasonable than an ARM, which ARM still trades at freaking 70 times sales. So, I mean, like, you pick a semi name, reasonable valuation, not up like crazy year to date. It's hard to find some of them. The fact that CoreWeave's barely up this year is actually kind of encouraging. But there's a few of others. I mean, Broadcom, not a massive move this year. It was at 490, now at 360, one of the biggest moats when it comes to custom ASICs. I think it's a nibble type of day. And maybe it becomes a nibbling type of week. But the hyperscalers will continue to spend. They are levering up to continue to spend. The exhaustion of the trade is not the end of the trade. But if people weren't exhausted, you wouldn't have these opportunities. And I think today's probably a little bit more of an opportunity. Qualcomm, are we getting a little bit of a pump there? Qualcomm, 181. Little bit of a bounce off 179, but it was at 186 in the morning. So this one actually still down 3% on the day. All right, that is it for me for the day. My voice is actually hurting. I don't think I've talked for 3 hours straight in about a week and a half. So I'm like legit feeling it. I'm like, oh crap, like this, it's been a minute. Like actually talking this long and like forcing myself to keep speaking. So I think we're going to end it there. We will be back on the close. We will have TT with Mr. Jason, and we'll get his take on how things are looking from a technical perspective. Again, a lot of these stocks losing some key averages, but do those levels are those levels getting disrespected to the point where you would end up actually going bearish on them? I think that'll be the biggest question that we talk about today with Jason, and then we'll keep going from there. Arthur, thank you for the super chat, brother. Here's to all the money you spent balling out in Bali. Singapore meetup was a vibe. Thank you to everyone. Super smart and hilarious people. Special thanks to Wong, Saloni, Dylan, and Over. Great time. Arthur, appreciate you coming to the meetup, man. It was a fun time. Again, it's always important, I think, to travel and get some more international perspectives. The thing about Singapore that was so amazing is that it's a country of no crime, and it's a country of cleanliness. Like if you get on the metro, the train, you can't even take a drink of water. Like, I mean, you could, but you know, you're not supposed to. Like, you're not supposed to eat. You're not supposed to drink water. Like on the path in New York, bro, I have a slice of pizza. Like you got people dancing. Like, you know, like you got crazy shit happening in New York. And in Singapore, it's just like it's a $5,000 fine. You even think of taking a bite of a donut on a train. There's no homeless people. I mean, like you cannot litter. It's incredibly clean, and people are walking at 2, 3 a.m. outside with no concern because no one has a gun. There's no crime. Like, you know, you have drugs. You basically get the death penalty. I mean, like, yes, there's some nuances to why you wouldn't want to live in that type of society. But in terms of just the pure safety that I felt walking around that country, and everyone was so nice. Because it's a really nice place. Like that's one of the parts I really appreciated the most about it. Now, obviously, I don't think I would want to live there because, you know, there's different things in the United States that I value more. There's also no capital gains tax, which is a hell of a reason to live there. But man, it's like, it's just one of those things where, like, in America, you value your gun rights. In Singapore, there are no gun rights, which ironically means there's going to be a little bit less gun crime, right? A little bit less murders and homicides and stuff. So I think that was also really important to experience, just the international perspective of what it feels like to live in a different place. And Bali was the opposite, because Bali, not that it was super unsafe, but there's 300 million people there, right? I think Singapore is like 6-7 million people. So Bali, there's just so many. The roads in Bali, let me tell you, there's not going to be any Tesla autonomous full self-driving anytime soon. And maybe in Singapore, not in Bali, not in Thailand, not in those places, but it looked like the streets of India. Like there were scooters, there were cows, not on the streets, but the cows were nearby in the farms near the highways. Like it was, you know, it felt kind of like India. So multiple different perspectives, but I think important to get those perspectives and, you know, take a little bit of a break and see some other parts of what the world is like. You would be arrested for ringing your bell so loud. Honestly, if I was in a public area and I started ringing the bell like crazy, they probably would arrest me. They don't tolerate that shit. So I'm happy to be back. It was a fun break. Thank you all for putting up with me not being there again. I take it very seriously, the responsibility of doing this every day. I've been working 4 years to build this, and I never, you know, one thing I tell myself is to never take it for granted that people could be doing anything they want during this time, whether it's nighttime or morning or in the middle of the day, but they choose to be here, be part of the stream, be part of the community, be part of the chat, listen. And at the meetup, it was so special to hear so many stories of how people consume the content and why they consume it. And yeah, it's really a blessing. It's one of those things I never want to take for granted. And part of not taking it for granted means to show up. So it's the first week-long break we've had from the show in a couple of years. And, you know, hopefully we don't have to take too many more breaks in the future, but I'm excited to be back and get back into the grind of it. Having said that, we are missing some word of the days. So let's pull this up and see what we've got. Let's see if we can get on a hot streak to start off word of the days. Here's what we've got. Oh, I've heard this word before. Ephemera. Ephemeral, I've heard that word. Things that exist or are used only for a short time, items or experiences that are fleeting. Daily headlines are mostly ephemera. The long-term trend is ultimately what matters, which is absolutely relevant on a day like today, where we're seeing more of that pain. Bitcoin getting a little bit of love. Semi's going down. Bitcoin going up. Look at that. Bitcoin 64. The day after MicroStrategy sells 3,000 Bitcoin. It's kind of hilarious that's when it would pump. Okay, how do you say this word? I think it's right, ephemera. I'm pretty sure this is right.
Ephemera.
Ephemera. Okay. I missed the R, but outside of that, pretty much on point here. It's like more greater. That was a mistake. I know you can't include the ER after you say more, even though tomorrow I'll probably say most greatest. And I'll have you guys correct me. But all right, that's what we got. Thank you all for joining.